Okay, we're live. Let me know, guys, if that lags a lot. If it's too laggy, I'll just shut down. And I know right now my video looks a little laggy to me. I don't know what you guys are seeing out there. I suspect it is a little laggy. So once we get to the charts, if it does lag too much, just let me know and I'll stop. And then I'll go until my internet is resolved, the issue, whatever we're having. Because like I said in the Discord, I was optimal this morning running at full speed. And then for some reason now I'm at 1/5 of a little less than 1/5 actually of um, my speed. So something's going on um, that's hurting our streams. So I have to call them. I called them night before last, talked to a lady, and then talked to someone yesterday, and I've got to try and talk to someone this afternoon. So all I know is they've got to get it fixed, or I'm going to have to leave the office and go stream somewhere else. So because I'd like obviously the audio to match the video, and we really don't need the screens lagging. So I will move the mouse a little bit slower as I talk. We'll kind of see if that helps maybe. So because I know sometimes I'm a little sketchy on how I move my mouse back and forth kind of quickly. So that's what we're going to do. We're going to go over our daily pre-market analysis here. I'll check the chat in a minute. We're going to go over platinum gold, Nasdaq ES. I know a lot of people made decent money yesterday, which is all you're after, is to look at your month. What do you need to make per month? Divide that by 4 weeks, and then divide that by how many days you can trade. Not everybody can trade all 5 days or want to trade all 5 days. So that's something you guys have to look at individually is whatever it is. I need to make 4,000 a month. Okay, well, that's 1,000 a week. That's doable, easy, because that's only $200 a day. That's it. $200 a day makes 4,000 a month. Okay, so as long as you're looking for those A+ setups, the 100% setups, and you take 2 a day and all you go after is 100 and close out, you're done. Or you take 1 trade and you get 200, you're done. What I like to do, obviously, is the runners, because we get like we had yesterday, where something's trending and we're already in. We just stay in. Now, I will mention that, I was trading on the phone. I was out, and the person that was with me, we've been in long. We were long all morning. We were short, sorry. We were in short all day, all morning, all day, short. And I'm talking ESNQ. And then one of the pull downs, he got in long. I'm like, what are you doing? Why are you getting in long? Well, wouldn't you get in long here? I'm like, no, it's been short all morning. It's been short through the London session. It's been short, I think at 4:30, it turned short at one of our 4-hour zones. I'm like, no. I'm short all day. If it keeps going short, I'm going to stay short. My bias, and I will only, until I see a higher high, higher low, consider even looking at longs. And he took it long. It popped up. He closed, made $100, but it about didn't hit his target. So risky trades, because you're totally trading again. And he goes, well, that's just the way I do it. So he did that twice or 3 times, I think. I know he took a loss, and I know one of them was a loss. I think 2 winners, 1 loss. And then he's like, I'm done. And he was working, so it's a little harder. But that's the way he trades. I'm like, dude, I've got to get you to start trading with the movement, trading with the direction it's going. If it's already moving in one direction, why would you fight that? Okay. It's like yesterday was like trying to stop a train if you went long on ES and NASDAQ. I mean, that's what it was. Everything was moving, and you just jump on the track and you are trying to stop it, and it just doesn't happen. Okay, so let's get in the charts, and I will check the chat here to see. Are we lagging real bad, guys? Yeah, that's one thing is trading view as a hog, resource hog as well. Thanks, Mr. Someone. All right, so let me know if this starts lagging, because we are in the charts now. And this is an online software. I've never used it. So I don't know if it's going to hold up or not. So yesterday, I actually just went in and did a hard recording for you guys. Okay. So a couple things we need to look at. We're going to start with platinum. So I know MC's out there, at least I think he is. He trades platinum only. I think he started looking at oil, if I'm not mistaken. He's big on platinum. That's all he trades, which is great. He's totally focused on this one instrument, which I recommend everybody doing. Yeah, I've done that. The task manager. I've had the task manager up and running for resource monitoring for the last 3 days since Sunday. So my PC, there's nothing wrong with my PC either. It's great. The graphics card's great. It's just, it has to do with my internet. And unfortunately, TradingView is real heavy on download. And right now my download speed's hurting. And then my upload speed started to tank too, which is going up to YouTube. So we'll see how this software holds up. So with platinum, you'll see I'm on a 4-hour time zone and a 4-hour time frame. So, you know, we always go out to the higher time frames and look and just get a snapshot of what's happening. Okay. And I'm going to try and go over these a little quicker. I don't want to make it real lengthy, but you need to get your bird's eye view, whatever you want to call it, every morning before I sit down and trade. I've got 16 gig of RAM, which is plenty for YouTube and plenty for what I have going. But I've thought about that as well. So one thing you have to do is you should always look at the higher time frame. I don't just want to come down. You know, I'm a day trader, intraday trader, whatever you want to call me. And if I can let something go all day long, I will. And then with the Forex and my other broker, that I'll get into more swing trades. And it's the same technique though. I'll get in, and if something's trending, I just leave the runners on, except for I get in with a lot more money on those accounts because the account's bigger. And then I got more to let ride. Okay, so you're talking way bigger trades in that account than what we have here. So I need to look out. I don't just want to dive into the 5-minute time frame, 3 or 10, because that's what we trade on, 5, 3, or 10. And most of us are. We're looking for that trade we can get in, and we need to capture that daily goal, that little bit of money we need to survive per day. Again, I don't care what it is. Everybody should know their number. Know your number. If it's $4,000 a month, you need to survive. And we're talking like survival money. Most of you out there are working. If you lost your job tomorrow and you could not go get a job, you couldn't go get a job. There's no government help. Nobody, no family can help you. Nothing. You absolutely lost it. You lost your job. You can't go work anywhere. All you could do is trade. That's it. That's all you could do is trade to make money. Then you need to make money. What is that amount that you have to have? Yeah, I'll be looking at oil too. So what kind of money do you need to survive on? Come up with that. If it's $4,000 a month, I just use examples in here for easy math. If it's $4,000 a month, that's $1,000 a week. Again, you're looking at $200 per day. If you say to yourself, I will trade all 5 days. I have the time to look for one trade at least each day of the week and try and capture my 200 and let some runners go. Well, for someone that says I can only trade 3 days a week, well, then you're going to have to divide the 1,000 by 3, and you're looking for about $333 and some change each day, each of those 3 days. And that might be 2 or 3 trades for you. So everybody should know their number. And I've heard so many people say, don't make trading about the money. I've heard it time and time again. I've heard it through the years. And I'm sorry, I trade for the money. I need a paycheck at the end of the month. So I don't trade just to sit here and watch the charts. That's not why I'm here. I'm here for the money. Because at the end of the month, I can't print out a copy of the chart and give it to my wife and her go pay bills with it. Not going to happen. I can't send her a screenshot of platinum right now, send it to my wife and say, well, look, I almost got in this, but didn't. She can't cash that. There's no value in that. So there is absolutely no value if I just sit here and don't make any money. So for me, I have to make money. That's why I'm sitting here. So yes, I'm focused on how much money I need per month. I know what that number is. Once you know what that number is and you set it, guess what? Put it aside. Okay. You have your goal, put it aside. Now focus on the trading. Okay. Yeah, I've done all that stuff you guys are putting in there. And guys, I just switched. And what it is I switched from cable to optics, fiber optics. With the cable, I had no problem. That's what's weird. So with cable, I had no problem like this. So it's only once we switched to fiber optics, now I'm having issues all of a sudden. And we don't know why. I should not be. That's the whole point of me switching to fiber optics. It should have even enhanced and got better. So we'll get it resolved, even if I got to switch back to cable. Because if fiber optics keeps running like this, I don't want it. So what I had to do is go out to platinum. Platinum broke an uptrend line we had. So we originally had this uptrend line from like down here to over here. Okay. And then we had to move it out. These moved down over here. We had to creep the trend line out to this point. Then it pulled up, pushed out a little further. We had to move the trend line. And I won't move them right when they break. I wait for a pullback, or I wait for further confirmation it's going down. And we're going to see that now. So this is a good time to be doing this. Because once we moved our trend line there, well, then it went up, came down, and kind of creeped past it a little bit, but pulled back up. We popped it a little bit further. So that's all it's done. Every time it has had a pullback, and that's why I want to point this out, because this trend line was back here. Platinum popped through it a little bit, pulled back up. So we moved it. Platinum popped through it a little bit, pulled back up. So we move it. Platinum popped through a little bit, and then we move it. Here, platinum barely popped down, okay, past it, and but we moved it. So this is like patterns you need to look at and see in the market. We're looking and we're seeing what platinum does every time it dips, every time it pulls back. It just breaks that just a little bit, some a little bit more than others, okay, and this one barely a little, but that's the pattern. That's what it's doing. It's popping past that ever so slightly. And when I say slightly, it could be a decent sized move on the smaller time frame. So that's its pattern so far. Okay. And then it stayed above and in these price levels. Over here, if you look at this area right here, that's just a range. Okay, that's nothing but sideways movement. Yes, you'll have a couple of the highs a little bit higher than the other, a couple of the lows like this one lower than these lows. You're going to get that. Some people will call those, what do they call them? Anybody know? They call them fake outs. It's not a fake out on a daily chart. Okay, but this is sideways movement. Then we had a pull up. Originally, this downtrend line was off these two candles, and this surpassed that a little bit. That high just peaked above it a little bit and then pulled back down. Okay. So right now, when you look at stuff like this, you look at them being in between our two trend lines. I'm a firm believer in trend lines. I've been using them forever. You have to go out to the larger time frame. And I 100% believe in this. I trade it daily, but draw an uptrend line, downtrend line on your 4 hour. Normally we just go to a 4 hour, and that's all you have to do, 4 hour on down. So 4 hours, 60 minute, look and adjust them, see how they are. But we also need zones. And so those that have been following me for a little bit, you guys know that when we trade, I know that platinum is going to do one of three things today. I know that every instrument we look at today to trade is going to do one of three things. It's going to go sideways. It's going to go up or down. Now, I don't have a crystal ball to tell you which way they're all going to go. That would be great if I could just pop in and go, hey guys, gold's going to go long. I want you to buy at this and sell at that. Now we can do that on a smaller time frame and get our targets and entries, and that's what we do. But overall, we need to look at the higher time frame because these are where the market makers move. And we've got way more than just the market makers. I mean, back in the day, there was actual trading going on, and there still is, but now we've got bots and AI, trading for people. So that plays into it as well. But those algorithms, so the algorithms that the bots and the AI bots are designed off of, those algorithms, they are designed, and those bots are created to think like the hedge fund managers, the market makers, the big banks. Okay. You got major players trading in the market. So they've trained, not them particularly, but programmers. They hire programmers. The programmers will program these bots to actually trade like they do, think like they do. Okay. So when I say there's bots in the market as well, that's what I'm talking about. I'm not talking about me writing a bot that trades, or you writing a bot that trades, or you hiring someone that writes a bot. I'm not talking about the little bots. I'm talking about the ones that are trading for the big boys. Okay. They think like the big boys because that's how they've been programmed. So knowing that, we're looking at these large swings on higher time frames. So what we do is, you could see this huge swing up here, huge swing back. Well, that's where our downtrend line is, because we expect if it pulls all the way up there, it might hit that level. So we draw the trend lines, and then we also draw zones. And what we do is we go out to the 4-hour time frame. And I know right now I'm still on a daily. I could drop down on 4 now. It just doesn't look as clean when you're on the 4 as the daily. And what we do is we look at high points and low points. And guys, you guys can go to the daily. That's what I was trained on. It was daily, 4-hour, 1 hour for me. Daily, 4-hour, 1 hour, look at market, 15-minute entry. Those were my 4 charts. So now that I'm on a smaller time frame, now that I'm entering on 3 or 5, and then when I news trade it to 1, now it's 4-hour, 1 hour, 15 for me. And then we're out on a 3 or 5 taking trades for the day. So if you notice, when I go out to the daily, you get a little cleaner view of. So don't be afraid to switch charts and look at what you. Someone asked the other day, what should I trade in indices? And ES is a little easier on most people than NQ, but there's also Russell and Dow. And I just said, go out to a 4-hour time frame. Look at all 4. Copy, save the images. Look at them all 4 together. 4-hour, 1 hour. Look at them and see what looks more pleasing to you as something you look at and go, yes, I can trade that. I like the way it moves. I like the way this one moves and not these 3. Okay, that's what you want to do. And that's what we're scanning for in the morning when we look to trade. Now, most of the time I'm gold and oil every morning. Gold and oil, I start looking at 8 in the morning. If I'm not in already, it's 8 in the morning. And then we go to indices after that. So we also have a downtrend line here. And it looks like I need to pull it up to the wick there. So platinum, we also have a downtrend line from that high to this high. So we've got multiple zones. I'll leave the zones on there. And guys, if it's too much color for you, just take these zones and I think I thought I had one that marks it as gray there. Just take them and gray them out, these old zones. Leave them on if you want, okay? You don't have to take them off, but if that's too much color for you and too distracting when you dial it out to the 4-hour time frame and the larger charts, then just gray these zones out, okay? You only need 3. We're only looking for 3. And what we have now is we have platinum actually breaking this 4-hour uptrend line. So if you see the real thick lines on my chart, those thick lines are the 4-hour down and up trend line. I make them thick so that I know when I'm on the smaller time frame. As the instrument comes to that line, well, then I know, hey, we're about to hit a 4-hour trend line. So it could turn, it could break. And that's what we're seeing with platinum. So with platinum, you know, with everything really, we had good pushes yesterday. And this was yesterday's candle. Okay. It was down. It had moved the day before. It had pulled down to the top of this zone. This zone right here was off of this wick, this wick area over here. The reason why I'm using wicks, that's kind of where the bullish side of the market, the bearish side of the market kind of battling out for price. Okay, the bearish side of the market pushed platinum down a little bit further than that candle closed, but yet the bullish side of the market came back in. So the bullish side of the market came back in and held that price up, pushed it back up, and said, nope, you're closing here. They did not let it go any further than where the candle closed. And then we see a huge one-day bullish candle after that. So I need to be aware of that price level. That's a huge level to be aware of, because that's where the big boys have deemed a good price between the bearish and the bullish sides of the market. So I want to be aware of that. Okay. I hope you guys are still synced up. It might be a little, if it lags, that's fine, but I want it to make sure it's synced up. So those are where the zones we've had. Platinum broke through and broke out, and that was yesterday. It just kept making a low beyond our 4-hour trend line and beyond our zone. Well, right now, what it's done today is it's pulled back up. Right now, where it is, we're up here at the top of the zone. So here's my thinking on platinum right now, just looking at the higher time frame. And yes, if you want to be a good trader, then this is what you got to do. Okay? This is the stuff you have to do if you want to be a good trader. You cannot just come down and sit at the chart. I'm sorry. It doesn't work that way. And say, I'm going to get in, I'm going to go this way. Now, we've got a great Discord. We've got very active people in there, and I love it because they're posting charts in there and images. You can see and I do too. So when I post, you can see what I'm in. Okay, so you can look at that and say, wow, that looks like it's still going short. He just got in. Okay, and other people do that as well. So I wasn't trading platinum. Now I do. I don't look at it first, but now I trade platinum. And that's because another trader in the Discord was talking about platinum. Okay. So it's okay to step out on your instrument if you want to try that. Demo it first, practice trade, but it's okay to do that, especially if you see someone post chart and there is an A+ setup, 100% setup, and you say, wow, that meets all my criteria, that he's talking about. That meets everything that I look to see. It meets my checklist for a 90% trade or 100% trade or an A+ trade, whatever you want to call it. Then you can go ahead and take that trade. So over the years, I've 100% traded stuff I've never traded before. It first started back in Forex. I never traded the pound yen. One of the traders that was from Cincinnati, Jim, he loved the pound yen. And I just had never done it. The spreads are wider than any of the other pairs. So I felt like I was stepping out on the majors. I only traded the majors. So I did trade the pound against the US dollar and the yen against the US dollar, but I never traded the pound against the yen. He did. So he was talking about a setup. He goes, hey, here's one of your setups on the pound yen. We looked at it live in the trade room on a Sunday night. And I was like, yeah, you're right. That's one of my setups. And I went ahead and took the trade and then started trading the pound yen. So added that to something that I was trading. So it's okay to do that. Just be careful. You don't want to instrument hop till you get one or two down that you're trading successfully. And I recommend doing one first. So right now, what I'm thinking on platinum is obviously the chart is telling me that the price is telling me that we went below the 4-hour trend line and 4-hour zone. It is testing the top of the zone. What else is there? Well, my uptrend line's there as well. So is this, I'm not in platinum right now. I would love to get in platinum, but for me, I need to see how it sets up here. Right now, it's just pulled back to test those two levels. So if it starts rounding over in here, because we'll be on a smaller time frame, and it could be rounding over now. We'll dial down. So as it's rounding over, if it starts rounding over in here under that uptrend line and zone, well, and gives me lower low and lower highs, I'll get in short. Ideally, because I would short it to the bottom of the zone and basically down here. Ideally, if it breaks through that zone, it might pull down to make a lower low than over here. But I'm on the daily time frame. So my target, if I were to see it rounding over on a smaller time frame and get in short, my target's going to be in here. Okay, and I'll be down on a smaller time frame. We'll go to a 4-hour, see what these candle bodies look like down here. If it breaks above the 4-hour zone and the 4-hour uptrend line and gives a it goes up, pulls back and bounces and turns and gives us a nice, uses that as support, well, then I would trade it long. My ultimate target that I would think it would go to, if you look over here at our downtrend line, I mean, what has it done? It's pulled down, pulled over toward that area, pulled down, kind of pulled back, didn't make it, stopped at the low, pulled down, pulled back to the trend line. So this sweep up here basically pulled to this trend line. That trend line is drawn off of that area to this area. Okay. So it turned right there. Just gave a little peck on the cheek. Bye, honey. Went down. All right. So it turned right there. So to me, we're going to keep this 4-hour downtrend line here, this extra one that we have. So we don't just have the two. We have two downtrend lines right now. We have an inner one, and then we have the outer one. So ideally, we've made a low. We've made a new low. I mean, we swept down here, swept down here. It's been making lower lows, lower highs, lower low, lower high, lower low. Well, let's go back and make a lower high. So where we have to be careful is where it's at right now. That's why I can't stress this enough. Got to be careful right now. It's going to break one way or the other. It's either going to bounce off and keep continuing short. That's a real steep move, but we get them. We do get them. I mean, look over here, steep move. We get them. Okay. But right now I'm cautious on this because I need to be careful because to me, it's made those lower lows, lower highs. This is a lower low. And yes, it could come down with another candle and creep lower and then go clear back to here. What I would love to see, again, I'll go short if it starts turning. And the smaller time frame, I already know it's printing. We just saw this candle pull back from the top of the zone down. So I know on the smaller time frame, we're printing red candles in there somewhere. We're probably printing lower lows, lower highs on a 5 or 3. I mean, I just know because it's pulled back. Okay, and it was clear up here. So if it starts again turning, pulls down, yes, we'll short it. Just be cautious. That's why we close out part of our trade and leave runners on. Okay, I want to leave the runners on in case it keeps trending in that direction. If it pulls back up through, comes back and tests this zone, and it could pull up through and hit that zone and then pull back to test this. I don't know how high it'll go. I just know that if it goes through these two levels, it should pull up. It could go halfway up. It could go all the way up into the zone and then pull back to test it. If it does that, and this holds up as support, we'll probably see another run up into one of these levels to make a lower high. and then we would trade it short again. So what's the overall trend on it? Right now, it's bearish. So if you pull in the whole big picture, it's bullish. Okay. And that's we're talking daily, on the daily chart, the weekly chart, the monthly chart, monthly, daily, weekly, it's bullish. Sorry, I might have said bearish. The monthly, daily, weekly, it is bullish. It's going up. But we have this bearish pullback. That's all this is a big bearish pullback on the daily. Okay. So where we're at right now, we could, if it goes up again, if it goes up into those areas and prints higher high, higher lows above the zone and trend line, well then, yes, we're in a bullish formation. And overall, on, like I said, the daily, weekly, monthly, it's in a bullish formation. So we're trading with a major trend. But right now, we've been doing nothing but bearish. So that's why we have to be cautious right now. But if it does pull and gives you higher highs, higher low, then it's okay to get in long because we're shorter time frame traders. Okay. So there's our 4 hour. So the 4 hour, again, you can see it's just creeped down. This was about Monday night right here. So Monday night started pulling down, 3 candles in, it's down at the bottom of the zone. So here's that big test, okay, where it's pulled down. This candle right here for 4 hour candles shot down, but then closed back up around the zone. And then we've just made small candles, okay? And then after this push we just had, well, here's the candle we're in now. This is our current candle that'll close at 10 a.m. Eastern. So this one opened at 6. And from 6 o'clock on, we've just had a big bullish push back up to test those 2 levels, the zone and the trend line. So one thing I would want to do is and one will change colors. So we can change the color of this zone. I like my mid zone to be yellow. And then the upper one red. I know it's like a reverse stoplight. I just thought of that this morning. I'm like, okay, upper zone's red. It's a reverse stoplight or reverse traffic light. Sorry. I'm not awake yet, guys. I got up at 4, but I'm still not waking up, just having a little bit of coffee. So here we are on the lower time frame. So what do we see on this time frame? Well, we know it was in a bearish push, so I don't need to cover that. 1 hour candles. We saw it push down. We saw it push back to test the zone. So far, when you look, see how it's different than what the 4 hour looked like. But we can see that this zone, the bottom of the zone, has held up. And that's off of a 4 hour swing high or low. That's off that right there. That's where these zones are super, super powerful. Look at this like a freight train. This is like a freight train right here, moving. These are 4 hour candles, just a big drop. Hung out sideways for a little bit, and then started getting, there's a high, made a higher high, higher low, higher high, higher low, higher high, higher low, back and forth, back and forth. That to me is a strong price level I have to be aware of. And it also turned at our trend line. So it should have been no surprise. So when you're trading, there's 2 ways to trade with the trend lines. We can trade when they break, but we can also trade between them. So right now we're trading from our outer downtrend line and this one more so, this inner downtrend line. And we're trading back and forth. We're trading up and down. It pulls to 1, starts giving us higher high, higher low. Guess what? Boom, we're in bullish. There you go. There's your bullish move. Pulls to that trend line. We look for lower low, lower highs on a smaller time frame. Boom, we're in bearish. This is the only time you have to be careful and more cautious. So this adds a bit more risk to our entries. Okay, you know I'm real big on risk on our trades. And I have certain trade criteria that I look for to get into a trade. This adds more risk for me. So am I going to trade platinum today? I don't know. The way it looks, I probably won't, because there's other things I can go trade. So if all you do is trade platinum, you may sit out, or you may find that entry on a smaller time frame and say, you know what? I locked in X amount last week, whatever your daily is. Again, if it's 4,000 a month, you're looking at 1,000 a week. So let's say last week you locked in 1,500 instead of 1,000. You have 500. You made a $500 bonus last week. That's the way I look at this. It's a business. It has to be a business. You got to treat it that way. So last week you went, you traded, and you made your $1,000 for the week that you have to survive. But then you also made a little bonus check. Well, $500. So that was last week's bonus. What I like to do is, if I'm going to get in a riskier trade, I like to say to myself, okay, I had a $500 bonus last week. I'm willing to risk $200 of that bonus, but that's it. If I lose that on a riskier trade, I'm done. I'm done with the risky trade. Okay. And this can be that could be a news trade. That could be a riskier entry. And I'm okay with that. But you don't want to dip into the 1,000, because that's what you need to survive. If you dip into if all you did was make 1,000 last week and you need 1,000 to survive at the end of the month, or 4,000, then guess what? If you start dipping into the 1,000 you locked in last week, well, at the end of the month, you may not have the 4,000 you need to survive, to pay your bills, to eat. Okay. Rent's due. So mortgages are due. So don't dip into your daily bread, your daily goal. Okay. Don't dip into that. Keep that. If you got a little bonus, then you can trade with that. Okay. So that's what I'd rather do. Use your bonuses on the runners, because that's why we leave runners on. They give you those bonus funds. So right now, I don't think I'm going to trade platinum. I don't know. I'd have to look down here. 15-minute time frame. To me, I see it. I see that you pulled up there. Okay. Still don't know exactly where you're going. I don't think you do either. I don't think platinum knows where it's going yet. So if it doesn't know where it's going, I'm not going to try and guess and try and throw on a trade. I could guess, if I was a coin flipper, I could say, well, it pulled back up to test the top of the zone, test the top of the bottom of the 4-hour trend line. Both those levels is resistance, and I'm going to flip a coin. But I'm guessing it'll go short. Okay, well, it's right in our zone for one. And then it failed to launch over here. And when we get to Nasdaq, I'll show you guys. I was in 3 trades last night on Nasdaq. Everyone failed to launch. I mean, they all profited, but it failed to just keep going. But I was trading it off hours, and it just was total sideways range. But I was trading short with yesterday's market. So for me, I don't know what it's going to do. So I'm going to sit out on it. It has to break back up here and then come back and test this level. And then I want to see a good solid bounce start off at before I'll trade it long. If I trade it long, it's going to be to this zone. It's going to be where I'll pull partial profit, and then I'll leave runners on. As long as it's printing higher highs and higher lows on the charts, I'm going to stay in long and just hold the runners. Shorts, I'm going to wait and see how it does off here. I would really like it to, if I'm going to get in short, I want to see it pull down back under this zone, pull back up and test that zone. And if I get a red candle, if I get a perfect test of that area, because we did over here. I mean, look how beautiful that turn is. It pulled down, pulled back, and just turned right there at the bottom of the zone. Right now, look at this candle. It's just bam, bam. It's just hitting the top and bottom of that zone. Both them candles, this one hit the bottom, that one hit the top. And we're on 15-minute candles. So again, this is off that 4-hour swing that came down like a freight train and then turned. So we have to be cautious. Okay. If it does pull down under this, I would love to see it do what it did here. I'd love to see it come down, pull back, and hit that level. If I get a red candle, then I'll get in. Where should my targets be? My target should not be way down here where my cursor is. I'd be foolish to think it's going to go clear down there. Okay. Look at where it's hit recently. Here, here, here. Those are turning points. So my first take profit, that's too close. There's no, and I don't know where it's going to go. I mean, if it comes down, pulls, turns, that's too close. I can't put my target there. I'd love to put it right here. But I can't say that's my first, that's my take partial. Okay. I could close, let's say I put in 10 contracts. I could close some out here as it comes down to this level, and it may not get there. It may turn before it right here at the inside of that bottom, may turn there instead. So I'll set an alarm on that. If I'm in the trade, I'd set an alarm on that. And if it hits that, then I'll close out some of my runners, because my closing partial, I will have already closed it probably in this level right here. Okay. So you have to look at the swings. I like to use the swings. I like the market to tell me where to pull it. If you were in short right now, I'd see pulling profit somewhere around here. Because if you look, we had a dip here. It kind of hit for a minute. And then over here, after it pulled through, it respected that as resistance as it pulled up. So if you were to happen to short here, that would be my close partial, just in case it doesn't go back to this low. So that's platinum. Again, I'm kind of sitting out on that. Here's gold. Let me dial out. So gold, we have to look for a level. Okay. Because what happened was, let me pull into here. So you see right here was yesterday. This is 6 in the morning. It pulled down. We had a pull back, nice bullish move, nice bearish move. We were in gold short over here because it turned right at this support and resistance level. So this support and resistance level was actually drawn off of a 4-hour time frame earlier. Oh, it was off that bottom right there. So you see where that bottom is? I don't know why it's tagged there. It was this bottom of this candle. Right where that swing down turned. Okay. That's where it pulled back up to and then popped back down. Okay. So when they break through your zone, well, we have to find another one. So this one's going to become yellow. That's going to become our mid, for lack of a better term. And then this one will be our red one. And that's the upper zone. And then this one up here, we can leave it red if we want. We can actually gray it out. I'll just leave it red. But we were trading it in here. And then it broke through and it just hung out. If you look at these zones, we were trading it in here between the two. It finally broke through because here's gold's all-time high. I think it's 50 or 5, what is it? 580, wasn't it, or something? I don't know what that candle high was. I don't remember, but it's somewhere up there. So we were basically trading it in here, and we also had a line from this high, because once it came down and pulled up here, came down, pulled back up to that level. Again, if you're paying attention, the highs and lows on the 4-hour time frame, then you would have had a line drawn there. Well, that's where it respected the line there, held up as resistance, failed to get all the way up, made a lower high, big push down. When it pushed down through this zone level, because this zone level, we're looking for levels of where the candle bodies turned. So it pulled down, and then all it did was stay under that and then pulled to this one. So right now we need to find a lower one below that, because right now it's in this zone. It's testing that zone we have. And here, if it goes short, if we see it start to roll over on the lower time frame, get in short, This should be your target. This and this over here. And I never go to the wicks. I always try and look for candle bodies, because the wick is indecision in the market. On this candle here, this lower wick is the bullish side of the market, the bearish side of the market coming against each other. Okay. So the bears keep pushing it down. They want it to go further, but the bullish side of the market pushes it back up during a 4-hour time frame. That's what we're seeing. We're seeing a bull bear struggle in there. Okay. I don't want to mark that as my price. I'd like to know where it actually stopped. Okay. So looking over here, same thing. We see it actually pop and stop. Oh, I like that. Pop and stop. We got a pop and stop. So that is going to be the price level I need to see. Is it going to fall back there? So two zones, I see two zones you could draw. And one is back here to this level. And we'll just leave that green. But that is one level, because I could completely see it. I mean, now that it's on the chart, hopefully you guys can see. I can completely see it. Oh, here it is, Wednesday, Thursday, Friday. If it does get and stay below the yellow zone, I could see it bouncing around in here. Okay. I could see it tracking over, but we'll probably see some big swings in there. It's gold, you know. So I could see it tracking and then a turn here. We'd have two reasons why it would turn here. We have a zone, and then we have an uptrend line that's been holding up over time. So I see two reasons why it would turn here if it gets down here. I don't know if it's going to get down there or not. I don't pretend like I know it's going to get down there or not. And then, of course, the other caution area is we see wicks. I need to find a level. Can I find a level back in here that looks solid? Because all I see is wicks. Okay. So this is where you got to kind of play around. I'm not going to map my box here. I'm going to miss the short in there somewhere. I mean, I'm going to miss the intraday trading if I mark that. So I want to keep this box on the bottom wick. I 100% want to keep it on the bottom of the wick. Okay. But that's too big of a box for me. If I leave that box there, I will not get into a trade if it starts to go short. Okay. I just won't. I won't see an entry. Oh, how do you guys like my family room in my video behind me? So anyways, the wick, I want to keep the bottom. So I want to drag the top. Okay. Right now I'm just dragging the top of it. I do not want my box to be like that. I'm going to miss something. So I could go here. This would be acceptable to me because price did push down to that level. The bearish side of the market pushed it over here. Bearish side of the market pushed it down. This is a candle. Even bearish side of the market pushed it down over here. Bearish side of the market started here, pushed it all the way down there. That to me would be acceptable. I don't think I need to go further. But if that doesn't look acceptable to you and go, well, I don't know, that looks all right, don't be afraid to pull it back in here and look for something in here. Now, I could make reasons and go right there. I mean, if I look at that box right now, but it's where it was. The top of it was right here at this wick. But now all I did was pull it back, and it is right at the top and bottom of this candle, the candle body. Okay. So again, I didn't really need to drag it back, but I just wanted to kind of show you guys that. Don't be afraid to pull it back and look and go, well, do I have more? I want to get a bigger picture even still, because we don't have a big picture right here in the chart as to this box level that we just drew. We drew it off the bottom of that. I pulled it over to the bottom of this. That looks acceptable. That's a decent sized box for support and resistance zone, because the bearish side of the market pushed it down to that level, and then over here pushed it down past this level, and that gives us the bottom of the box. So pulling it back, and the reason why you would want to pull it back is because I could see once it broke over here, this support level off these candles, well, then it came back to basically turn under that zone. And then if you need to, you can always go back even further and look back. But I try not to go back that far because we typically don't have to. We're looking for more recent price agreement. Okay, we don't really care so much what happened last week or last month in the gold price agreement between, and that's just what I'm calling it, guys. There's no term. Okay. So I'm just calling it price agreement between the bullish side of the market and the bearish side of the market. So I don't really need to look way back to see that price agreement. I can see it recently, and that's what we want. We want more recent price agreement between the bullish side of the market and the bearish side of the market. Why? Because over time, so let's say you've got bullish side of the market, the hedge funds, the market makers. So the market makers on the bullish side of the market will have price points, okay, that they will trade at, that they will buy at, that if gold drops that level, they will buy. It's a price level. But that price level can change over time, and it has. Because as gold is hitting all-time high, okay, back in 2011 or 12, I can't remember which, I used to travel around buying gold and silver from people through the country. Back then, gold was just hitting $1,000, just hitting it. And we were like, okay, is it going to break 1,000? I mean, our ads were gold's at an all-time high. Guess what? That's the same ads that jewelers are using now. Gold is always at an all-time high because it keeps creeping up. So back then it was hitting 1,000. Well, back then, let's say the market makers were buying at 700, and gold fluctuates like that, swings. So it got up to 1,000, dropped back down to about 7 or 750, I believe, and then creeped over 1,000 and got up around 1,200. And then guess what? Creeps down below 1,000, gets up over 1,200, like I think it was 13, 14, creeps back below 1,200, then gets up over the 14, gets to 15. So that's what gold does. Every time it pushes up further, but you get a pullback. That's the bullish and bearish side of the market. So if the market makers are buying at a certain price, then we need to mark those levels. And that's basically what we're doing. So we saw a big swing up here, a bullish or a bearish push down, and then bullish side of the market steps in and we see a huge push up. So to me, this price level looks like a price level of where the bullish side of the market may take back over. Okay. So that they may take back over. So right now we're seeing a bearish push. Is it in here that we're going to see that bullish side of the market take back over and another run up back into this zone that we were trading in here for a couple of days? I don't know. And that's why we're down on the smaller time frame. But to me, that is an acceptable zone. So I'll leave that green. I'm going to leave that green. If it stays above this zone, I mean, it could stay in here today and you could trade it back and forth. If it goes above the yellow level and pulls back and tests the support, we'd look for it to go to the red level. We'd be in long. If we see a turn here now on the smaller time frame, we could look to get in short to that level. We should take partial profit on the way down as it's given to us. Okay. I've seen too many people get in trades, put on 10 lots, put your stop loss out, you're risking $200, and you go and it goes in your direction and you're up 400 or 500. And the only reason I know is because I used to trade that way on the 15-minute time frame, and I hated seeing my trade go up and I'd be like $500 and I'd move my stop and then a pull and my stop would get stopped out. And I sat there all day long, and guess what? At the end of the day, I was at break even. Just loved it. I just loved it. Sit there for 3 or 4 days in a week. And that's where I developed pull and partial, because it's like, I can't do this. I cannot sit here all day long take a trade and that trade is up to 100, 2, 3. That trade's up and I don't take any of that profit when it's given to me. And then I let it go back and stop me out. I cannot live on that. I cannot go to my wife and say, sorry, this month I had 2 weeks that were break even. I can't. I have a need there. So since I have a need, I'm going to close partial when it's given to me. Someone was in the Discord last night, and I'm not going to put out a name because I can't remember who it was offhand. So I don't want to say the wrong person, but they were in there when I was trading Nasdaq, and I closed out 2/3 of the trade. And that basically pretty much made my day, that one trade. But then I traded again and again. So close out, you have to close out partial. That's my job. That's my job, and I do my job. All right. So this 1 hour, I am going to draw a trend line here. We don't always draw them on the higher time frame, but I'm going to draw one from there to right there because that's around where we're at. Okay. And I'm just going to leave this as a downtrend line because I want it solid. It's not, my trade lines are dashed because I use them to support only when I'm in a trade. This I have to be aware of. Is my magnet shut off? It sure is. Let's turn that thing on. I like using the magnet. So, and I need to use this one because as we go down the smaller time frame, that's going to move around. As you look at it now, what does it look like to you? Well, we were already trading it bearish yesterday. We've had a nice bullish pushback, but it pulled down to make a lower low than here, made a lower high, made a lower low. Are we making a lower high? That's how you have to look at this. Is it making a lower high? To me, right now, it looks like it's making a lower high. We've definitely stalled out here at the zone. So again, someone's mentioned it to pull that back. All right. There. Yeah, I like that. Someone mentioned to come back in. I'm glad I'm looking at the chat here. I look in a little bit. So they mentioned to just pull it back to the next time. So what kind of direction are we hitting? Okay, that's what we've been trading. So right now I have to set up and say, yeah, thanks for that. That was Mr. Someone. I don't know who Mr. Someone is, but he is someone, and I appreciate that. So it is swinging bearish. We're still seeing bearish structure. Okay. Lower high than this one, lower low than this one. Then it starts. This was kind of a test, but we basically had lower low, lower high, lower low, lower high, lower low again. Are we turning here? Is this it? This might be our short. Now, it could still pull up to tap that line. I could see it go either way. So you have to plan for either or. All right. So, oh, Peter, thanks. Thanks. I didn't know who that was. Mr. Someone is Peter. Awesome. Thanks. So, I could see it going either way. All right. So we have to, and we're on a 1 hour and we're not trading entries off the 1 hour. And we have the US stock market opening up in about 24 minutes. So what we have to look for is look for structure to build up. Right now on the 1 hour time frame, I see structure is built up as bearish. You can't tell me, you cannot tell me we have bullish structure on a 1 minute chart. And I hope everybody can see that. Right now, the 1 minute or the 1 hour chart, sorry, is bearish. I don't see it any other way. From the left of the chart to the right of the chart, it's been swinging down and it's had some nice swings. Okay. And then we go down to the 15 and we go look for our entry. See, right now, this looks messy to me. The reason why it looks messy is we don't have clear highs and lows in here. We just don't. Okay. It's pulled back up to test this support or resistance level. That was an old support level. and it stayed under that. So I need to be aware of that price point. Okay. If it breaks above that, well, we'll see if this holds up. We have several areas that look to me as though they might hold up as resistance to this pull up. We have this line, we have that line, we have the trend line. Okay. So even if it pulls up to this level, is it going to round over and then pop short? It could pop short right now. And then I think most people are down, like I said, the 5 or 3 looking for an entry. So if you look at the 5, look at what it's actually doing. So, and we trade down on the 5. So on the 15, I look at that and go, yeah, okay. I don't really see it. If I'm trading here on the 15, I would need to see a 15 candle come down and close in here somewhere. 15-minute candle come back up and tap the back of that. And then I need to see a red candle because I only enter short on red. I only enter long on green. Okay. That's just the way it is. That because I need the bullish side of the market to come in. And in this case, if it pulls down and pulls back, I need the bearish side of the market to step back in, because as it pulls up, what color is that candle going to be? It's going to be green. It's going to be bullish. I don't trade short against the bullish side of the market. So let the bearish side of the market come back in. Let's see a red candle, and then I would get in short. But that's a 15. So 15 doesn't really look like a great indicator to me. So let's go to a 5 and a 3. Down on the 5, that looks more acceptable. It came up and hit that price point, pulled back to the middle level. And even in here, it made a lower low than in here. Okay. Pulled back up, hit that price level, pulled back, made a lower low, pulled back up, hit that price point. Does anybody see what's formed in here? And then it actually pulled down and made a lower low again. I don't know if anybody sees this, but this is something that, and I don't have that drawing tool over in my favorites. Why? Why is it just not there? It is now. All right. So normally we see a big move, we'll see more consolidation. You'll see a high, it hits the same low. You'll see a lower high, hits the same low, lower high, hits the same low. Well, that's a flag or pendant formation. Right now, we're kind of getting the reverse of that. And I'll just pull it to that line. I'm just plopping it on here, guys. You can adjust it out. But right now, we're seeing that. So we are seeing lower lows, which is great for bearish confirmation. So right now I have some bearish confirmation. I have bearish confirmation. It wants to keep pushing low because that's what the candles are telling me, because that's what they're doing. It pushed down and made a low, pushed down and made a lower low, pushed down and made a lower low. So the candles are telling me that it wants to keep pushing low. That's all you got to do is learn to read them. And that's all we're doing. 5-minute time frame. These swings are telling me that the bearish side of the market wants to keep pushing it down. But what's the bullish side of the market doing? So the bullish side of the market keeps pushing it up, but to the same price point. So sometimes when they tap on the top like that, they do break through the high side. So just be careful if you trade it, because right now it's around that major kind of decision time. I would 100% short this if it goes up, but my zone's right there. And remember, this is a 4-hour zone. This yellow line, yellow zone, is off of a 4-hour candle. So if a 4-hour swing turned right at this level, should I not be aware of that on a smaller time frame? And yes, I should. So again, during a 4-hour move, it moved down or up and turned right at this zone, because that's off of a wick, 4-hour wick, okay, or candle body. So I have to be aware of this, okay? You have to be a little cautious because you're looking and saying, and again, that's why we draw the zones, 100%, guys. That is why we draw the zones, is because as we're down here on the smaller time frame looking for entries, we know. You just get it in your mind. Just get it in your mind that when it comes to a zone, yes, it could break it. I mean, you look back here, it broke that level, pulled back and went on, but this one it turned at. They will not always turn like this. This is a beautiful turn right here, guys. It pulled down, hit the bottom of the zone, pulled up, pulled down to make a higher low right at the mid level, pulled up, green candle, bam, buy, because you probably had a trend line over here down that even if you didn't buy there, you bought on one of these. So that is a beautiful turn. They don't always turn like that. Sometimes we get this where they're back and forth, and that's what we're getting now. So sloppy. Right now it's kind of sloppy. If it pulls back, and if I was to take this short on a pullback, I would get in lighter. That's just me, because I know full well that it could go and test this level up here, the back of this trend line. So for me, I'm a little cautious. This may be a caution day. But that's where we're at on gold. Oil, I like it's in a better place. And as we've been talking, it's been pulling down. We've already had levels in oil. So you look at the 4-hour and let's see. This was last night at 2 a.m. So we had this push. We were in oil short yesterday. We had a nice push down, and we had our 4-hour trend line. Okay. So let me go back and look at this. This was a new downtrend line. This one was drawn off of this level to that level, that high. And then we had this old one. And this is why I leave them sometimes. Because here's what I want to show you. Let me go back. So overall in oil, if we go way back, let me switch it to like a daily. Okay. Overall in oil, we have an uptrend line off the daily. We have a downtrend line. Okay. We have our outer trend lines. That's great. That's what we need, because as you see what it did, it went right to that 4-hour trend line and then turned. Okay. So we have the outer ones. And then what we did was on this move down, after this big swing up, where it started making lower lows, lower highs. And the guys, though, it don't get any better than that. That's a good view of lower lows and lower highs. Okay. So it's in a bearish formation. Turned at this zone. This zone was drawn off of this candle wick back here, off of a 4-hour time frame. I only draw the zones off 4 hours. The red, yellow, and green one. It turned right there, broke through the trend line, and just shot up. Turned, came down. When it starts, when it turns. And I covered this before, and I want to mention again, do not get in the habit of this right here. So this was your trend line down here. That's your trend line. Okay. And you can see the big candle that broke it. Big candle broke it. Let's say you're waiting on a retracement, and there's people that will move their trend line like that. Okay. Well, then it breaks again. I have no clue if they're just keep getting in long every time. Okay. But then they'll get a big green candle. Let's say they're waiting on a retracement. They don't get a retracement. Okay. Shoot. Well, let's move it there on the new candle. 4 hours later, another candle formed. They move it. Well, I didn't get my retracement. Surely it's gone so far, it should pull back. You're trying to tell the market what to do. It's not going to listen. Waiting on retracement. Don't really get it. Okay, we'll get in there. Or we move it there. See where I'm going? They actually missed this whole move. They missed the whole swing because they're moving the trend line as it happens. You cannot do that. Trend lines are drawn from highs or lows off of swings. I don't have any swing in here. Guys, it's taken off from the train station and it just took off. There is no swing back. So there is no reason for me to try and chase this all the way up as it goes. You have to have what happened here. It gone up and then the bearish side of the market took over and we started printing red candles. Well, guess what? Now we have a high. Only at that point can you move your trend line from here, where the other was, to here. That is the only time you should move a trend line. You should not move them when you're just printing candles past it. You need it to play out, and then it has to come down, because here's why. If you kept moving your trend line up as it went, then every one of those times you moved your trend line up on a smaller time frame, you're probably trying to short that. Because you're going, I got a trend line there. Well, the only reason you have a trend line there is because you put it there. That's the only reason. That's the only reason you have a trend line right here. It's because you put it there. So you shorted that. See that wick? I can guarantee whoever moves their trend lines when a 4-hour candle is printed, they got in short there. Because that next candle stayed below that line and pulled down. And they shorted. And guess what it did? If they didn't pull partial, if they went on, they may not have had room to pull partial, but it stopped them out. There's no high. It's a candle high, but that doesn't mean squat. The candle high does not mean anything other than it's been going bullish. Every one of these candle highs says, yep, we made another bullish move. That's it. Only when you start getting the turn, then these two red candles, once those two red candles form, yeah, I put that line there because the bearish side of the market stepped in. Okay. Now, even sometimes that don't play out. Sometimes you get two red candles and then it just pops back through. It'll happen, but you need to wait for it to start turning. So we've had nothing but a nice bearish push on this back to this 4-hour trend line. Okay. So the last 4-hour candle popped and hit this candle right here. We're going to dive down to a smaller time frame. See, because it just went through two zones. It popped at we're at our 4-hour zone, 4-hour trend line. It pulled up, and that's your play. If it lower time frame looks like it's bouncing. 60-minute. Here's your 60-minute candles all the way up, all the way back. So right now we're back down at the support zone. We have two levels of support here. We have a support zone of support trend. Oh, this is what I wanted to show you guys. I need to show you this first. So I left this old trend line on here, and there's a reason. This old trend line was as it moved down. It popped, pulled down, gave us a reason to draw one out here. I don't always move them. And this is why I don't like to move them all the time. You guys know that when trend lines are broken, or even support zones like we have here, support resistance, when those levels are broken, they are often tested. If you look at the two lines and look at them as one swing up and one swing back, we had one swing up, and just look at all this over here as one swing down. If you can't visualize that, dial it down to a day, put it out on a day chart. But what I see with my eyes, and this is something you train yourself over time, okay? This is what you train yourself over time. What I see is a big test of this downtrend line. So we were definitely in a downtrend. Again, nice, steady moves. Those are not a little sideways there, but nice, steady pullbacks and pushes. Okay. Pull back and push. pull back and push, pull back and push. Nice steady moves. That was where we drew this trend line on the way down. When it broke, we traded long. We were in long till it says to get out of the long position and go short. Lower lows, lower highs up here on a smaller time frame. So if I look at this swing or bounce off of this, we got 5 minutes stock market open. If you look at the swing off this bounce, just look at all this as one swing. Where did it go? Well, it went straight to the 4-hour trend line, but what else is it near? Okay, a 4-hour zone, but it's also really here. It didn't come down and hit the line, but it's near the line. So to me, let's go to the daily, because you could see it better on the daily. I've trained myself to see that. It's just years of watching trend lines and watching the bounces off of them and the pulls down to them. So I could see that. I saw that earlier when I was talking, and that's why I popped back out here, because I definitely wanted you to see that. Look at it on the daily. There's our trend line that we traded down. When it broke it on the 4-hour, we're trading long. There's our bounce off the new trend line. We had a turn, so we drew a new trend line. Pulled down, pulled back, tested. Where did it go? So now I hope you can see it a little better. These are day candles, but it basically down to test that back of that trend line. So that gives me 3 levels, 3 reasons to say I probably should be trading bullish in here. That's going to be my bias. We've tested a 4-hour uptrend line. We just tested a zone, 4-hour zone. What was that off of? Well, that was off of this swing. So look at these 2 swings. If you pull this back, I can almost guarantee you we're right around that same level. Wow, that's magic. No, it's not. It is not magic, guys. Sorry. There is no magic happening over here. We're just looking at the turns in the market, the price points, and we're on daily candles. But I didn't draw this off a daily. I drew it off a 4-minute time frame. But this was our move. We had a nice bearish push down, nice bullish push back. Guess what? Boom, that's a swing. Turn in the market. I need to be aware of that price level. That's where we are at now. Where we were at the other day was back up here to this price level. Now, I didn't have to draw it off that. We actually had this right here. This zone used to start back here. The other day, I cleaned off everything, off like all my charts, and redrew. So this zone was back over either off of here or off of this swing in here. But that's where it pulled and turned, because always looking for reasons why it might turn. Well, again, look back here. This swing up and down topped out right there. This swing right here, up and down. Wow. Again, magic, topped out there. Is it no wonder why this turned here? Again, we're looking for an agreeable price. And I don't care how you say it, but we're looking for an agreeable price between the bullish side of the market and the bearish side of the market. It's basically just a price level or zone where things turn. We have to be aware. If we go down to a 3-minute, 5-minute, 10-minute, 1 hour, 15-minute, and that's what you're trading off of, and you do not peak out at the higher time frame, you're not doing yourself any justice. You're trading kind of with blinders on. Okay? Because what would happen if you were to get in as it, like over here, this bullish move up. Now, we were in off the trend line break, and we were bullish on this a couple days. But what happens if you didn't get anything and you just went and it was way up here and you said, I'm going to buy. I'm going to buy because I think it's going to clear up here. Well, if you didn't peak at the higher time frame, and that's as far as you went back, then you missed the fact that we had a turn here and a turn here that was right where you're getting in. So again, just peek out. make sure to look before you get down and trade. So let's go down to the 15, and then I need to get on the other two because their market's open in a minute. So 15, I'm not trading on 15 anymore. So we're not taking them on there. And I've missed it because I didn't get in because I'm down here talking. But that's what we've had on the 3 minute. So we basically had it while we've been in here. Okay, this is about 8:09. So we had it push to the bottom of the zone, hang out at the bottom of the zone, push through the zone, pulled back to test it. Over here, it held up as support. This is what's called, they say, past support becoming future resistance. Past resistance becomes future support. So over here, as it pulled down, this held up as support. So that is past, as it pulled down and pulled back, that's past support. And you look to see if it's going to hold up as future resistance, and it did. It doesn't always look this beautiful, but that red candle would be your entry because it pulled back, hit, and then red candle. I only want to trade bearish if I see a red candle. That's your entry. As it moves toward your target, your zone where you pull, or your target should be the zone, your main target. But where you close partial should be between your entry and here. Everybody's going to be a little different on that. It's not a specific level. It's a level or price level for you. And I can always help you kind of with that. But that goes back to how much you need per trade per day to meet your weekly income, to meet your monthly income, to get your monthly paycheck. Everybody is different. Okay. So that's something you have to figure. It all goes back to that. You need to start planning your business from how much. If I went out and bought a business tomorrow, if I went to look to buy a business, the coffee shop, it's been discussed that I buy the coffee shop. If I did that, I have to know how much money I'm going to make. I'm not just going to go out and buy it. I'm not. That would not be smart. Is that a smart business decision if I just go throw money at a place and buy it? A restaurant, store, whatever. That's not smart business. I need to analyze it first. I need to think about it. What are my goals for this business that I'm looking to buy? Same with trading. You should analyze it before you even sit down and trade. Okay? That's where all you need is a pen and paper, and you plan out your business. That's what this is. If you want to make money at it successfully for a long, long time, and this is the hardest way, someone said it yesterday, this is the hardest way to make the easiest money. It is. You have to learn it, but you need to structure it. It is a business. Structure it like a business. I'm not going to go buy a business till I know what I can make. I'd be just throwing money at something. I wouldn't even know how much I'm getting back. Really? No. So you need to start there. And if you haven't done it, do it today. I mean, you can do it anytime. It's never too late to think about what you need. But basically, close out partial as it went down. It pulled back, tapped that zone. You would have runners on. So this is where it comes into, if you leave this would be an entry. I'd at least either put, okay. So if I entered there short, I would not put it at the recent swing. That's too tight. That is not my stop. To me, if it comes back up to test the mid zone, I'm out. Okay. So I go back the previous high. That's just the way I was taught. That's the way I've been doing it. That's the way I recommend it. I know some of you are still going to do a tight stop. Just never go right to the tick of a candle, and you would have been okay on this. There's going to be times you'll take it out. It's just a little riskier. So I go off of previous high, and what do I magically see there? I see top of a zone. That would be my stop. The only reason I'm mentioning this, because I think everyone can see this would be a decent entry in oil. Okay. It pulls down, you close partial. If you move your stop to break even, let's say you closed partial here. So when it got down here, that's where you close. You put on 10, you said, I'm closing 8. I'm going to let 2 runners go, and I'm going to move my stop just to break even, which is back over here. That's it. Move my stop to break even. Well, you got stopped out. You got stopped out. And now it's back down here again. And that's okay. You'd say, okay, well, I closed out there. I got stopped out on bonus. That's all where it is. It's just right there. I'm okay with that. And I'd be okay with that too. Now, when you're not okay with it, is when it goes down to the bottom of zone and goes down the 4-hour trend line and tests that again. That's when you're not okay with getting stopped out. Let's just call it what it is. And you're not okay with it because you were like, man, I got in. I just pulled my stop too tight. I pulled it to break even, got stopped out. And man, I missed this whole move on my runners. Runners were 0, break even. So you got your daily goal. You closed out and you made your 100, 200, 300, whatever it is per trade per day. It could be 100 per trade, 200 per trade. That's it. Boom, I got it. I got my daily goal. Let's say it's $200. Boom, you closed. So you got 200 locked in for a day. You met your daily goal. You went out and worked for a paycheck. Because if you go work for someone for the day, guess what? You got to put in 8 hours. I'm sorry. If you want a day's wage, you put in the time for the day. So you're typically putting in 8 hours. So you did this in less than 8 hours and you locked in the same money. Let's say it's 200. Guys, I know construction workers around here that they make 160. That's for an 8 hour. They make $20 an hour, 8 hour day. That's 160. That's what they have to make per day. Well, they can easily do it in trading. You could lock in 160 there. Pulled your stop to break even. You just don't make anything on runners. And if that's the way you want to manage your business, that is fine. You could do that. You will miss out when they trend. You have to make that decision for yourself. Not one person can tell you how to do that. That is all 100% up to you. Now, if you would have moved your stop from here down to here, just above mid-mark, you said, okay, I want to, as you come in here and you close partial on this candle, you'd say, you know what? I want to minimize some of my risk on my runners. Okay. I don't want to pull to break even. And you say to yourself, I've seen that way too many times where it pulls back and stops out break even like this. And you say, I want to give it some room, but I would like to maximize on some of my risk of what's open. Because you would leave, let's say 10 contracts, you close out 8, you have 2 on. You do have a risk from this entry price to here for 2 runners. And that is what you will lose against your partial close, whatever you close partial. So you can move your stop, but again, I go off highs and lows. So I would want to keep it above that price. For me, it would go like there. That would have been acceptable to me because I'm not putting it right at that price level in case this price area is tested, because it was pretty much over here. And then you'd be saying to yourself, you're that trader that goes, man, I was almost taken out. That's going to be your favorite phrase if you do that. Pull right to a candle wick, candle bottom, top wick. You're that trader that now says every trade, I was almost taken out. I was almost taken out. Okay. So just give it the room to breathe. So right now, again, you would still be in short on the 2 runners. Okay. And again, we don't know if it's going to push through the zone and push down to this uptrend line. But if it does, you have runners on. And if it pushes through the zone, pushes down here, you could close out one of those runners there. You can close out one of the runners if it pushes through here. So as long as it is making lower lows and lower highs, I would keep the runners on. So right now I have to be bearish And unfortunately, I'm going to be sitting down on some of this while we're talking. But right now, I'd have to stay bearish until we see what happens here. Okay, we've stalled out. We're hitting sideways movement. It's no wonder why we're doing that. It's not a mystery. It's not magic. We should not wonder why it is sitting sideways right now there. We have a 4-hour zone there, and we have a 4-hour uptrend line there. We should not guess and wonder why it's sitting there. We know why it's sitting there. I absolutely 100% know why it's sitting there right now. The bearish side of the market has not been able to push it down any further because we have buyers in here. We had buyers in here on the 4-hour time frame on back that stepped in. It was on back right there. Buyers stepped in. Big, nice, bearish swing down. Buyers stepped in. Nice, big, bullish push. Okay. Well, guess what? More than likely, let's put the odds in our favor. And the odds to me say that more than likely, buyers have already stepped in right now. It could still go bearish. It still could push to the 4-hour trend line. That's what we had here. Okay. And if you look back, we had sideways movement there too. And the reason why you want to look at this, and we are analyzing the charts. Okay. I call myself a senior, but a senior technical analyst with fundamental awareness, because I need to know when the news is coming out. Okay. And when the stock market opens and all that. So we need to know when news. So technical analyst with fundamental awareness. The fundamental awareness comes to knowing when news is coming out because it will affect the moves and your trades. So you have to be aware. Doesn't mean you're trading news, but you need to be aware. Okay. But you're a technical analyst right now. Every one of you sitting there, if you're doing these things to your chart, trend line, zones, you're a technical analyst. You should be looking at what the chart tells you. Well, again, we see push down. We see nothing but sideways movement. That's kind of what we're starting to see here, sideways movement. We don't know when it could push back down, but you see that it did. So it pulled down, sideways movement, even a little push to the upside, but then it still went. The bearish side of the market was not ready to give in, and it still went down that 4-hour trend line. That's why you have to have the trend lines on there as well. And I've been using trend lines for a long time, and they do work. So I will have them on my chart. But that's what we're seeing right now. So right now it is still, you're still thinking bearish. I am still bearish on this until it starts giving me higher highs and higher lows. I don't know if that's now. I don't know if right now I'm going to see it come up and form a higher high, higher low, and then go to this zone. I don't know if it's going to pull down here to this bottom of this green level, higher high, higher low, or go down to test the 4-hour trend line again. I will tell you this. If it comes down and hits this 4-hour trend line and I see higher high, higher low, I'm in long. I'm in long. I'm going to max out my contracts. If it comes down and I see it off the top, the middle, the bottom, and then I see higher high, higher low, I'm in long. I might put on less contracts. I just know that it could still go to the 4-hour time frame. That would be the only reason I would trade a little lighter. Not a lot lighter, a little. There's a little risk. There's a little risk that it could still push the 4-hour zone. Down here, I'm maxing out contracts. Up in here, if I buy higher high, higher low, and I buy slightly less than full contract or contracts. Okay. Because I just know it could go down there. So that's my business plan for today on oil. This business plan that I just made today on oil will not hold up tomorrow because oil is going to be a different place. So we're making these business plans every single morning. Whoop, I passed ES. Let's go to NQ because I want to show you guys. I hope this stuff's still on here. Oh, you're kidding me. Is it not? There it is. There's my little puny trades. My little puny trades from last night. So let's go out. So 4-hour time frame. We know where we're at. Okay. We were trading short. And if you look at the 4-hour time frame, it did multiple things in here. So don't be afraid, trade NQ. It's just a little riskier than ES, but you have to look at those individually. So this candle right here, that was Monday. Okay, so Monday, this candle right here, that was which candle was that? The 10 o'clock. So Monday, it pushed through a zone and pushed through this uptrend line. Okay, pushed down to do what? I mean, let's look at what it's doing. Okay, over here, what do we see? Well, I see a high, I see a low, which is higher than this one. Test to the back of the trend line. Then I see a higher high, higher low, high at the same point. I mean, it wicked a little higher. I don't normally call that a higher high. Test the same price level, but we got a higher low. So the bullish side of the market's still in play. Okay. As it swung up here, the bearish side of the market stopped it from going above this level. But as it pulled back, the bearish side of the market would have wanted it to go where? Down here, break that. Well, they didn't get what they want. The bullish side stepped in and said, nope, that's it. You get bullish pressure. And then it popped through these highs. So again, low over here, higher high, higher low. Technically higher high, higher low, higher high, and then whoop, 4-hour candle just shoved it back down. And then it trickled back up. Okay. So in here, when it swung down and started pulling back up, well, what is that? Well, that's definitely a lower low than here. So you have to think, are we seeing bearish structure come in and to be formed? Is that what we're seeing? When we were making higher highs, higher lows, we get a lower high all of a sudden. Well, that's the start of bearish structure to form. It could just be a pullback because, guys, this could have kept going. It could have popped right from here and went higher high, higher low, and could have kept tracking up this trend line. So we have multiple reasons that we are looking at, again, for are we seeing bearish structure come in and form? We need a reason. What's our reason for getting in? What's the reason? What direction should we be trading for the day? And we're looking at the 4-hour time frame. Well, when it popped up here, is it any wonder? You'll hear me say this again a lot. Is it any wonder why it turned right there? That zone's drawn off of the wick up here. Basically a swing. Swing in the market, swing up, swing down. Major area, price zone, I need to be aware of. It hit right there and then just tanked. So then it pulled back up. On this pull up right here, so that's reason one. It hit a zone and it pulled back and made a lower low. So you have to look at these swings and go, okay, it looks like it's a start of a bearish push. We would have still been bullish. So you're still bullish because here's an uptrend line. Okay. And it just had broken this down one. So when it came and pulled in here, this zone, you're trading out of the zone long back up to here as your target. It doesn't always hit the price, and it didn't. This is where you have to close partial. And then what did we see? It pulled down and made a lower low than this one. So that for me, once it makes this lower low, is like, yep, that's it. Dude, the 4-hour time frame is giving me all kinds of signals. One, it stopped at this, which should be telling me, let's start thinking of shorts. Let's start. We could start because it turned right there. But when it forms a lower low, okay, well, let's start even thinking of shorts even more. However, I'm not going to short that candle. You never want to short on an extension. Okay. And that's the problem with pending orders below lows or highs. You're putting an order at an extended level. It's going to push through and you're in. So I'm not going to get in there short. And plus we have a trend line. So that would be kind of foolish on me. Bad business decision. Let's put it that way. Not foolish. That would be a bad business decision because we're still in an uptrend overall. There's our trend line. However, it's starting to possibly form bearish structure because it made a lower low than this one. Pulled up, and then when it pulled back down, it does a couple things. What's that telling us right here? This move. Well, two things. One, it broke the trend line. It also broke back through the bottom of the zone, which held up as support over here. Not quite so much here, peeked through a little more, but we could call that holding up. So it broke through the zone, broke through the trend line, lower low, lower high, lower low. I'm thinking bearish right there. That's when my mind switches over. Yeah, we've got it. We've got full on bearish structure form. Are we going to get a retest of the zone that it just broke or the back of the trend line? Well, yeah, we got a retest of the zone. So every one of these on the smaller time frame, you're down there getting short. You should be shorting every time it pulls up to the zone and starts rounding over and gives you lower lows and lower highs. You need that extra confirmation. Let me go down to a 3 and a 5 here. See what they look like for you. So again, you have to come down and on a smaller time frame, and I know it looks messy, but as it pulls back to the zone, okay, every one of these pullbacks, you're looking at the swing. You see higher highs, higher lows. Okay, boom, it's retracing back to the zone, retrace back to the zone. All of a sudden, and if you had a retracement line here, which we did the other day, retracement line here, well, it broke it. That's your trade. Your trade was to get in when it broke the retracement line. That's your confirmation. Now, some people trade off sold price, and they will literally, when it gets up to the zone, they will sell. They might take a loss over here because it went up to the zone, and if they sold there and had their stop above mid zone, they were stopped out. And they might have taken 3 or 4 trades in there, stopped out. I wait for confirmation. I want that A+ or 100% setup. So the extra confirmation for me is we'd have a trend line here. And when it breaks that trend line up, the retracement line. So when it breaks, we'd have a retracement line there. When it breaks the retracement line, it pulls back to test it, gives a red candle, boom, you're in. I know it's a lot of waiting. It's a lot of waiting. But there it broke the retracement line, pulled back to test it, red candle. There's your entry. You trade to the previous low, which that's what this was. So you have to be willing to pull partial. If you would have pulled partial, pulled your stop more acceptable, because on this entry right here, your stop should not be right above it. Some people do. They put a tighter stop. If that's part of your business plan, your trade plan, then so be it. Okay. You got to stick to your rules. Other people are trading way up here. If that's too far of a stop for you, then you can always go in lighter with you do one of two things. You say to yourself, nope, I'm going tight stop loss. Can't go up here. Tight stop loss, full on trade. That's your risk. Give it a little more room, stop loss back here. You can go in with half your position or go in lighter. But then when it pulls down to give you profit, take some profit, because you are not sitting here all day long to not capture profit. All right. You're just not. I wouldn't be. You have to take partial. You need to. I mean, my business plan is that I need a paycheck at the end of the week. That's part of my plan. Pull back on here. So retracement lines, all they are trend lines. That's a retracement line. So we'll color it green. Where is it at? Retracement up. So that's a retracement line. As it comes up, there's a low, there's a higher high, higher low. It starts to move. At that time where it swings down and you get green candles, guess what you're doing? You're drawing a retracement line from here to here. This is why you're down on the three or five trading, 10, 15. So you draw a line from there to there. When that line is broken, you look for shorts because we already covered that. We're below this 4-hour zone. We bounced off of a higher zone. We broke an uptrend line. We should be thinking shorts. We should be short every time it breaks until we see confirmation. If it breaks through the yellow zone, well, then we'd start looking for longs. So on this one, some people get in on a break. Guys, this is something you have to decide on yourself. I could tell you both ways, and you're going to have to pick one. You could say to yourself, looking at this now, you could say, oh, yeah. Wait. I've heard Butch talk. And when it breaks the trend line, you wait for it to pull back. Wait for a retracement back to test that price level that it just come off of. Well, it came off the price level here, which we don't need to draw a line off of this high because we have our zone there. That's pretty much where our zone's at. So I'm not going to draw that. So he says, wait for a pullback and get in. And so a lot of traders are waiting for that pullback and then get in, say, on that candle. Okay. And if you did, that's okay. That's a good entry. It just pulls back a little further. It wasn't ready to go. It pulls back further to that price level, right to it. It just wasn't ready to go. Some people are getting in right here, right when the trend lines broke. I don't do that on a 5-minute chart. I will do it on a 1 minute if I'm trading news. That's typically the only time. Unfortunately, sometimes you see that trend line break. You say, okay, I'm not getting in. I'm waiting on it to retrace back. Hindsight right now, we could see that was a good decision. I didn't get on a trend line break. I'm waiting on it to pull back. I want it to pull back to this level, and then I'll get in. Well, it did. Pull back that level, you got in. Or you got in here. There's 2 areas you could have got in. And you're saying, well, I'm glad I didn't take that, especially if you waited back here to get in. You're saying, well, I'm glad I didn't take that entry because I got in short still at a better price with a tighter stop. Okay. And you're like, whew, really glad. And that's because you can see the charts now. But when it's trading live and you see this pull down and you see this pull down, I can guarantee you that someone, probably a lot of someone's around the globe, took that short. It broke their trend line. There's a lot of trend line traders all around the world. It broke your trend line or retracement line. Retracement lines are just as big as trend lines, guys. I mean, it's pulling back. When it breaks that, you're just more looking for structure to set up higher highs, higher lows, or lower lows, lower highs, sorry, to keep going bearish. So probably there's some traders that would take that candle. There's other traders that when they see this one, oh man, it's ready to go. That's what's going through their mind. This is total mind game stuff when you're trading. But that's what's going through them. Oh man, it's going to go without me. And they get in. I'm okay with you getting in on that. Get in lighter. Your stop should be still above these highs. This recent swing up, swing back right here, put your stop above the high. It's going to be up in the zone. So that being said, is that a huge stop for you? Let's say you typically will put on 10 contracts. For me, this is not 100% setup. Okay. I want to trade with the trend. The trend right now is bearish because it dropped off the top red zone, dropped below this zone, broke an uptrend line way back over there to the left. Okay. That to me says I should be bearish. So I get 50% of my criteria met if I go bearish. So I have 50% reason to take the trade just to short. Well, I'm not a 50-50 trader, or I'd flip a coin. Okay. So I have 50% reason to take it short. It just pulled back. It retraced back to a zone. That retracement back to the zone gives me 10% more to take the trade. And why would I short down in here anyways? Anywhere in here? Why would I shorten any of this? You don't. You missed this one. It pulls back though. Now it's retraced back. That gives me 10% reason to take trade. I'm at 60. Okay. It pulls down. It breaks my uptrend line. Remember this or retracement line. This retracement line was just off of this point A to point B. It broke that too. Well, there's another 10% reason to trade. Oh, well, Butch says if he gets a red candle, he's thinking short. I have 70% reason to take the trade. So I'm okay with taking that entry if I can stomach the stop loss. First, it's only met 70% of my criteria. So what do I do on a 70% entry? It's not 100% trade. It's not that A+ setup. So if it was 100% trade, I use 10 lots just so you guys know it's an easy example. So let's say I use 10 contracts. If it's 100% setup, I would typically put on 10 contracts. Well, I'm only at 70 right now. So I'm not going to put in 10. So what is that for you? So I recommend dialing it back 2 contracts, every percentage you don't have. So at 90, you would put on 8. At 80, you would put on, wait. Sorry. 10 at 100. At 90, yeah, 8. And then at 80, you'd put on 6. Well, we're at 70. So let's go 4 contracts. I would be 100% okay if you guys took that trade and said, man, but I normally take 10 contracts. But since this was not 100% setup, it was only 70, I put on 4. You limited your risk, your exposure, okay, to the potential of a pullback, just because it might happen. I want to get in. You say, I want to get in because it broke the retracement line. I know the trend is, I should be thinking down. I should be bearish because we're below a zone. So that's my thinking. Normally I'd throw on 10 but I need to go in lighter because I know it might pull back. I'm not waiting for that. I want to make sure I don't miss it. You go in with 4, your stop loss should be where? Stop loss should be above the swing high. So you're putting it up in the zone. So you look at that and go, okay, I'm putting on 4 lots here or 4 contracts here. My stop has to be here. Is that acceptable? If you say to yourself, nope, that stop is too long, it's twice of what I normally risk, well, then do 2 contracts instead of 4. You were going to go in 4. That's acceptable because 10 is 100% setup. 4 is 70% setup. And you should have them right now. You shouldn't have to think this through every time you look to enter. It should be wrote down on a piece of paper, taped to your computer, your desk, somewhere. It should be on your trade plan that's out in front of you. And you get in with 4. And then you look back and go, okay, well, where's my stop? Okay, I'm going to put my stop here. Oh, wait a minute. That's twice of what I want to lose. That's twice of my acceptable risk. So go down to 2 contracts. Okay. And that's okay. You're sitting in there, but guess what? You're not sitting there getting headaches, your stomach's churning and burning, because you're sitting in this negative right here on 10 contracts. Okay. This will help you be a better trader. This will help you create less stress as you're trading, because I can guarantee every one of you that's out there, I don't know how many people we got in here, but I can guarantee that everybody that watches this, everybody that trades would agree that if you got in with 10 contracts there and you were in the negative here on 10 contracts, you'd feel worse. Anxiety, stress, you'd feel worse than if you put on 2 or 4. I would. I mean, if I put on 4 contracts and was down, let's just say it was 400. If I put on 4 contracts, it was down 400 in the negative. Well, I'd feel way better than putting on 10 and having 1,000 in the negative. To me, I'm like, oh yeah, I'm only down 400. I could have been down 1,000 if I'd have put 10 lots on. Okay. But you're putting on trades there because you don't want to miss if it pops and runs. This is what it did. And again, looking back, we can say, oh yeah. Oh, sure. I wouldn't have taken that. I'd have waited for it to pull back. It's easy to say now. However, when it looks like this right there, and you're like, I know I should be thinking bearish. It's pulling off a zone. It just broke a retracement line. I should be thinking short. I'm in. So at that time right there, you should have this plan. But wait, I've only checked off 7 things on my list. I've only checked off 7 things on my 10-point checklist. I need to go in lighter. And right here next to 70%, it says 4 contracts. Check your stop loss. That's what it says. Right next to 70% entry, it says 4 contracts, because this is your plan you made last weekend. I have to put on 4 contracts unless my stop, it says check stop loss first to see if it's acceptable. Nope, it's not. So I'm putting on 2. And you're doing that because you don't want to miss if it pops and runs. Okay. That would be your thought process there. That would be mine 100%. Okay. It didn't give us a 100% checklist yet. So I'm going in a little lighter. You can always add to that position as it drops. Okay. You can always add to your pullbacks. So this is what we saw overall. Was a nice pullback. We've had several starts off of that zone, and we even had some that pulled deeper. So somebody shorting in here would have got stopped out. I mean, you just would have. You're depending on where your stop is, but I can guarantee most people aren't putting it way up here. So you'd be stopped out on some. So where I got in, and we traded this down, this was yesterday. So that was yesterday, and at 4:30, we actually had an uptrend line. It was, right here. I remember this candle. All right. I won't mention his name here. He's a local trader, but he got in long there on that red candle. I did not. If you can look at the top of that chart, you can see, one, it's in my yellow zone. And look what we have here. That is a line off of a 4-hour support resistance level. So would I go long there? No, I would not. Again, I put the odds in my favor. I put the odds in my favor by peeking out at the 4-hour time frame. So I put the odds in my favor. I looked at the 4-hour time frame, found some good support and resistance zones off of market maker turns. I'm stacking. I am literally stacking odds in my favor by doing all these things. And yes, it is work. But you know what? This is my job. It's work. And I'm sorry. When you go to work, guess what? And when you go to your job, it's work. This is not hard work. I'd rather be doing this than doing a lot of other things out there. I wouldn't even want to go work in a restaurant. I mean, I did that back when I was 16, Bob Evans. I wouldn't want to do that at all. So this is easier than that. I could go out and scrub dishes at Bob's or cook. Okay, well, this is easier to me. I can sit. I can get up. I've got a little family room area sitting here in my office. Got the treadmill and stuff set up. Got a dartboard. I can get up and go do those things. I can get up and throw a round of darts. I can get up and go hit the treadmill. I do that a couple times a day. It's right there. So this is all in my office. This is a sweet setup. Or I could go stand somewhere and cook for 8 hours. So to me, I'd rather be here. I got coffee going. I got more coffee upstairs. I can go get it when I want. I could take breaks when I want. Are you kidding me? This is the sweetest job I've ever had. That's what you need to say to yourself. This is the sweetest job that I've ever had, that I will probably ever have. I work for myself. I make money for myself, by myself. I don't answer to anybody except me, my wife. I mean, you may have someone you answer to. But as far as trading, no, this is my business. She knows it's my business. She doesn't care how I run the business as long as I do what? Bring in a paycheck at the end of the month. That's what I have to do to keep her happy. If not, I may have to go cook somewhere. Okay. But I'd rather be here. This is, again, the sweetest job I could think of to have. I get to do what I want. I can crank the music up, power hour. I normally, if it gets real active, I crank music up. I have to get in the mood for that. But I can do that because this is my job, my rules. This is my business. I wrote out a business plan, a daily business plan. Okay. But he took it long there. I waited till it pulled back in, pulled back down, broke this level. When it broke that level and tested, well, we were in short, long term, thinking bullish, 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 bullish. Every time it come down, you're bullish. If you traded in here and got in short and pulled your stop to break even or had your stop up here, yeah, you're taken out. But when this rounds over, you guys have heard me say it before, when it starts rounding over, forming lower lows, lower highs, well, then you're getting in short again. You're shorting. We were all day short. And then it comes to last night. So let me go to a 3. I'm going over these with you because these are trades I took. That's why I wanted to get here. I don't know if we'll get to ES. We'll probably cut it off here. I think we've been going to a little after 8. So we're hitting the 2-hour mark, which I don't care. I could talk all day. These are trades I took last night. And this is I don't even want to say the power of taking partials. This is solely the 100% reason why you should take partial trades. Okay. Close out part of your winning trades when you are in the profit. So let me go back to what I was looking at. So here's the market before I even entered. There it is. So I had drawn a line here off this candle bottom. That's where the bodies of the candle turn. Okay. So it turned there, pulled up. What do I see? As it started pulling down, I have a lower high. Okay. Still bearish. Again, we were bearish all day yesterday. That was a huge move down. You should have been bearish all day trading with that trend. That gives you 50% reason to take the trade. Just because you're trading bearish, you have no reason to go long at all. Yesterday, Nasdaq, ES, none of it gave you a reason to go long. You should have not even went long yesterday. It should have been shorts all day long. So again, this is what I looked at last night. Pulled down, and this is yesterday afternoon. It turned, pulled up here, made a lower high, come down, no lower low, turn. I see lower highs. As you can look, and you guys know I like to trade between 8 and 10. And we'll probably do a couple lives. I don't think I want to, I don't want to say corner myself, but I don't think I want to commit to doing every night live between the hours of 8 to 10. I mean, my wife would probably kill me. So, but what we'll do is we'll do a couple here and there where we come in and from 8 to 10, we're looking at trades Eastern. It'll be 8 to 10 p.m. Eastern. I love to trade. I'm already in trading anyways. That's why we'll do that. So I'm already in looking for trades, but a lot of times I'm just sitting, we're watching some TV and I'm on my phone or I'm sitting here, okay, because the TV is right over there. So the family will sit in here, and that's why I brought my office down here, so I could still sit around with family and talk and stuff, but I could be monitoring the market on anything but my phone. So that being said, we'll do some lives in here too on it. So I'm always looking between 8 and 10. Typically it's gold. Typically the only thing I trade it. Guys, hang on for 1 minute. All right, sorry, but the little office dog come over and told me she had to go outside. She can't wait till I'm done, evidently. So anyways, yeah, 8 to 10, and it's gold typically only. So last night I looked at Nasdaq. Nasdaq, everything moves. Guys, everything has to move. I mean, it's going to move sideways, up or down. And because of time, they tend to move sideways a lot. Nasdaq ES, when do I trade those? I normally look 9:30. So 9:30 US stock market opens, AM Eastern. So that's when I look to Nasdaq. So in the morning at 8 o'clock, or today it was 4:30 when I got up. But somewhere when I get up in the morning, the first two instruments I look at is gold and oil. Okay. I get in gold and oil, gold or oil or both, one or the other. But I look to those two instruments and look and see how they look. That's what we've been doing. Look at the higher time frame, look down. Does it look like it's a good setup for us to possibly look for an entry? If it does, then I'm going to watch that. I like to be in a trade and try and get in gold and oil between 8 to 9:30. I don't have to take an entry. You don't have to trade anything. I know I'm going to trade something, but I still need to see a good setup. I look for gold and oil, and then before the US stock market, I'm peeking back out if I haven't already at ES and Nasdaq. So I don't always look at ES and Nasdaq early in the morning at 8, because if I get to here at 8, I'm typically looking like, okay, is there gold and oil I can get in? Let's go back 4 hours, 60 minute, 15 and look, see what they look like, what the setups are. Oh, okay, I see where I could possibly get in gold. Gold looks better than oil for a possible entry to watch for. Oil looks better than gold for possible entry. It doesn't matter. It could be either or, but those are the two instruments I look at. Could be both. I'm watching several at one time. I've got two big monitors. I can watch several. So I will still watch them all. That being said, if I can get into something before the U.S. stock market opens, then the U.S. stock market opens, I'm looking at S&P or NASDAQ, those two, to see which one looks better. So to me last night, I saw this and I was like, well, okay, we're back in that flag formation. I mean, that's what it is. I mean, it just, all right, I have a line down here. I drew that line, have a line down there, and I won't get a good point because I'm not going to move the chart over. But anyways, that's pretty much it. We see a, triangle pattern. And again, I'm just not going to drag my point over. But if I drag this point to the right, it'll, these candles will be inside there. But I don't want to do it because I want to show you what I was looking at as I traded. So basically, that's where it was. It popped through the bottom of that. So when it popped through the bottom of that, that's where you'll hear me say extension, pull back extension, pull back extension, pull back extension. That's all highs and lows are. Okay, is a pullback and then an extension. Past that, so you get an extension, you get a pullback, you're looking for an extension. Well, we didn't get the extension right here. Okay, but if you look at the whole move, pull down, pull back, extension over to here. I mean, you're ignoring, to me, yes, it broke the low. It's making a lower. Once it pulls down here, guess what? Once this candle forms, closes, once it wicks down, doesn't matter. When it pulls past this price point, it is making a lower low. That's what it's doing. I mean, it can't turn back. It's already down there. Sorry. It cannot turn around and say, oops, sorry. I did not mean to go down there and start making a lower low. Sorry, I take that back. It does not. It broke this low. It is making a lower low. There's no way around it. You already started. No takebacks. Okay. So again, swing down, swing back, and then swing down to make a lower low. Is this more sideways? Yep, sure is. It's 100% more sideways than anything. I mean, you still see, if you look at this, you still see bearish tendency. Bearish tendency. Why? Because the lows or the highs keep getting lower and lower and lower. So the highs keep getting lower. So that's that more of a flag formation. So don't be afraid to draw trend lines on your chart off of these, or draw a triangle. Look for the bottom, look for a low. So when it pulled down, pull back, again, off to the left, we traded it yesterday bearish. We were still bearish. It was still in bearish formation last night. So again, pulled down, pull back, still thinking bearish, but I want to see it break here. Nasdaq was off hours for me because I don't trade it. I've traded it a few times in the evening, but I normally don't look because it's typically gold between 8 to 10 Eastern. So I was looking at gold, and then I peeked out. I was doing some other stuff and saw Nasdaq. I'm like, oh, we're making a lower low. So this was at 8 something, I think. Yeah, 836. So to me, I'm like, okay, it's pushed. Do I want to enter there? No. Enter there? No. I'm not going to try and enter on an extension. I'd rather have it pull back and possibly test this level it just broke over here. Don't enter on the extension. If I enter right now on extension, guess what I have to say to myself? Riskier entry, not as much criteria to take the trade, go in super, super light, and be willing to sit through a pullback. That has got to be what you say to yourself. If you see something breaking a low and you say, I'm going to get in when it breaks that low, or I'm going to put a pending order below this wick. I'll put a pending order there. Before you place that pending order, you need to cycle through this in your thought process. I'm getting in because it's up here. In order for it to come down and hit my pending order right there, guess what? It has to get extended. It has to push down past this low. So if I get in and put a pending order there, then one, it's a riskier trade. I'm getting in on an extension. It's probably going to pull back. I will be sitting in the negative for a while. Better not go full contract. I normally put on 10. Let's put on 2. Let's put on 1. Okay. So what I'd rather do is not go in at all and wait for a pullback. Does that mean if it takes off like a freight train and keeps heading south, I missed it? It sure does. That's what it means. And I'm fine with that because 8:30 at night, I'll wait for the market to open. But I said to myself, I thought, if it pulls back and gives me an entry, I'm going to look to take it. So how much criteria do we have right now at this point? And that's what I want you to think about. Yesterday, it was bearish all day long. Right now, still lower highs, lower highs, lower highs. Oh, that's bearish. Still, bearish side of the market still pushing. That's awesome. So I'm thinking I want to trade short. I want to be bearish. So that gives me 50% reason to take a trade short. Well, that's not enough. Again, pull out a quarter and flip it. I'm not that trader. So just because we're making lower highs and just because it traded short all day yesterday, that does not give me enough reason to just jump in short right now at any one of these. It just doesn't. If I wanted to be a super risky trader and I wanted to short it here or here or here, guess where my target is? My target, it better be the bottom of this triangle. It better be. And if I shorted here, like right here and here, it should be that low. That should be where I pull partial. If there is enough room for me to short there and pull out partial here, okay. That's acceptable, but there better be enough room for you to close out partial. Because that may be the furthest it goes. If I can't close partial there and leave runners on, I won't take that entry. And look what it does. Sits sideways for a while. Now you're sitting sideways thinking, I made a bad decision. It even pulled back. You're in the negative a little. Oh, I made a bad decision. So you're sitting for a while and then it goes down. You're like, oh, okay. I'm in the positive now, but your target's like way past here. And it never gets there. Not yet. You don't close partial, which you should. It's given to you. Close out part of the trade and leave a runner on. I'm okay with that because look where it turned. It turned right here, right there. Okay. So that is why the close partial. So again, shorting is in my favor. Let's put the odds. Let's see how the odds stack in our favor. That's what we're basically doing. Let's see how the odds stack in our favor on NQ. Yesterday, bearish. Right now, last night, still pushing down, lower highs, bearish. 50% reason to take a trade short. Well, I'm not a 50-50 trader. Okay, so we drew a line. I drew a line there. Well, it just broke that support level. Guess what? One of these three candles, you better be thinking there's 10%. So now we're at 60% reason to take the trade. That is still not enough for me. 50s and 60s, I don't trade. Has to be 70 and above, 70, 80, 90, 100. Sometimes we've gotten up to 120 before. Reasons to take the trade. That's overkill, but we have bonus reasons to take trade then. So on those 120s, you better believe I'm stacking on. Okay. So we have another 10. We're at 60. So what would give us a better entry? Well, here's an extension. We don't want to enter on an extended price. And that means if we don't enter it and it keeps running like a freight train, we lose. We're not in it. We miss it. I'm okay with that. I'm okay with that to get in on a better price on all my trades. I'm okay with missing taking trades on extensions like this, not waiting on a pullback. If they take off and go without me, I'm okay with missing those because I'm looking for good, better, solid setups and I want better pricing. If I get in up in this level somewhere short, it's getting in at a better price than here in case it stalls and it doesn't keep going. Plus, if I get in on extension, guess what? If it pulls back, I'm sitting in the negative for a while. Reason 3 for not taking an extension. There's 2. Reason 3, where's my stop got to be? In order to stay out of the way of the market moves, look at your swings. My stop should be above here. It just should. My education, okay, I'm pretty educated. I think everybody else out there, I think everybody's educated. It's in here. So my educated guess is that I ought to keep it above this. Again, I'm stacking odds in my favor that if I put my stop there, I will not be taken out on my full trade or my runners. Now, you look at that and go, that's a lot. First of all, I have to go in light if I want to get in on this extension. I should not take 10 contracts. I've only met, what did we say, 60% reason to take trade. We're bearish because the market's bearish. There's 50%. 10% is it broke the bottom. There's 60% reason to take trade. I don't take 50s and 60s, but if you did, you'd have to say to yourself, you know what, on 100% trade, I stack on 10 contracts. This is 60. Ooh, well, let me see. At 90, I go to 8. At 80, I go to 6. At 70, I go to 4. So at 60%, I could put on 2 contracts. And you say to yourself, you know what? I'll go ahead and take this risk, 2 contracts. Last safety check. Check your stop. Okay, well, my stop should be up here. And don't never put it to the tick. Let's put it up here. Give it room. Check that stop distance. Oh, I can't stomach that. If it pulls back up to this level here, I can't sit through that, even on 2 contracts. I'll say your risk is $200. Well, I'm just throwing numbers out there. But you look at it and go, well, that'd be a $400 loss. That's twice what is acceptable to me. Well, then you don't take the trade. You just pass. And you're waiting for a pullback. So that's what I got. I got my pullback. Right there. Let me kind of zoom it in and give you bigger candles. How's that? So I got the pullback. That's what I wanted. So we had 50% to take it short with the trend, 10% because it broke the support level. Now we're at 60. We have a pullback, 70% reason to take trade. I'll take that trade. That's 70%. However, I don't enter on green candles if I'm going short. Because right now, to me, the bearish side of the market has pushed that back up, and it could still go on up to test this. I've just seen it so many times. I have to have a red candle. So right now I'm at 70. 50, direction of trend. 10, going short. We're at 60. Pulled back to test previous support. Tested as resistance. 70% reason to trade. I am looking to get in right now. So I'm already at 70. If I wait for a red candle, well, the red candle is 10 more percent. That puts me at 80. So anything else is over 80. That's what I need. I need that 70, I'm going in lighter. 80, I'm going in a little heavier. 90, 100, a little heavier. Full contract size. So, but right now we're at 70. So if I know if I get a red candle, I'm in. There's my red candle. And look at where I left these on the chart for this reason. But that's where I entered. I got in short. For me, that was a beautiful setup. It pushed down, pulled back. There was my extension. Now, I didn't enter on the extension, but if you look at the price, it pulled back. I am not a guy that gets in just because price pulls back to the point. Now, there are some that do it. If I was on a 1-minute time frame, I can guarantee you I got in on a better price than this. Because on the 1-minute time frame, it pulled back and you got 1-minute candles, and we would have seen a red candle in there, and I could have got in at a better price. But I wasn't. I'm watching on a 3 then. So unfortunately, where I got in was exactly where someone got in on the extension. But to me, I'm taking a safer entry because I've met more rules, met more criteria. So that's where I got in. Now we have to look at what is one of my trade managers. So now we're in the trade. Okay. Stop loss was up here. I went ahead and put it above this price level because that's a good price level for me. I went ahead and said, you know what? That's a good price point. Let's put it up there. There was my stop loss. And the other reason was because we were way down here. I entered way down here. So for me, I'm like, okay, it's pulled down. Nice bearish candle off that bounce. That was a good support level over here. It really reacted as resistance here. I'm in, stop there. Now what do I got to do? Now I've got to do some trade management. So there are options you have with this. Let's say, again, we're at 70, 80. We're at 80. So let's say you do 6 because you dial it back 2. So 10 at 100, 8 at 90, and at 80, you're at 6. So we'd put in 6. So let's say you put in the 6 contracts. You could put on your 6. You could put a limit order on down to take your partial out. So whatever that may be. So you can put on 6. Let's say you want to close out 4. You could have a limit order on down set to close out 4. Okay. You just set a separate trade up. It's a separate order. You can't, it has to be a separate order because you've got 8 on, you're closing out 6. You should close partial out. And this is the prime example, guys. I've got 3 of them right here. I'm going to tick it over right there, right there. So right there is why you have to close partial. You just have to. If you are given profit, you need to take part of that profit to lock in your daily trade money so you can make your weekly paycheck, your monthly check at the end of the month. If I would not have closed out partial there as it went down, and we're talking some big trades. I posted them out in the group. If I would not have closed partial there, I'd be in the negative right now as of that candle. Negative. But wait a minute. I was in profit over here. It pulled back. I was still in profit here. And you mean you sat through that, you were in good profit and didn't close anything? Didn't think to take out some of that money for your bills at the end of the month? Nope, sure didn't. Now I'm in the negative. Now I'm in a losing trade. This right here is the power of the pulling partials, and I'm trading off market hours. So that makes it worse. I mean, I was trading at 9 o'clock at night. So a little bit riskier because the market on this is during the day. And as you can see, earlier when we started this, looking at this, the price was here. I know you guys don't see any price line. We don't have a price line in here. So it's not a close where it is now. So there's my trade. Again, I closed out partial. So I did what I was supposed to. And my target was further down than this. My target was on down, my main target. The only reason I had the box here is because that's as far as it went. So to cover it this morning, I pulled my boxes back because I just wanted to see they did not go where I wanted them to go. It's because the market really don't care what I want, unfortunately. So that was trade 1. I did not trade again when it got here. So I didn't get right back in, but I could see that as an entry. Okay. Because actually I still had runners on then. Because if you draw a retracement line on back, I'm just trying to look at the candles. Well, I see a pullback again to that price point. It broke it, hit it again. You could have taken that as an entry. I did not. There it is again, right at that stinking line. Look how well it loves that support and resistance line, that price. What is that? 18,931.75. So I got in. There's my second trade. I didn't get in here. Still had runners. It pulled back. So when it pulled back and turned again, and I had a line here, as it pulls back, we draw lines. Draw your retracement lines. The nicer the pullback and that you can draw that retracement line on, the better it's going to look when you're looking for your entries. So that was my retracement line. Got some green candles in here, drew a line. And it was before this candle. So I didn't move it. I didn't come in and move it out here. I just left it there. It just during that 3 minutes peak below. I'm like, okay, that's my line. Drew it from here to here. It's retracing back to where? Our price level. Can we get back in short? Yes. We have 50% reason to take the trade still. This is my next trade. 50% reason to take it short with the trend from yesterday and the current trend. 10% reason because it broke that level back here. So we have 10% reason there. We have another 10 here. So we're at 70. Red candle, 80. Another 80% trade. All right, I'm taking it. So I got in short. My stop was a little tighter. I put it here because now I'm tightening it. See how I did that? So this was my line originally. It's off that support level we drew. So that's our support and resistance line. So originally when I got in, I had it back here, okay, up above. And this should not attach. When I moved it, it attached that candle. Should have been there. When it pulled back on this one, I moved my stop a little tighter because I'm like, look at how it is respecting this particular price level. I feel safe. I'm short with everything. I got 80% reason to take trade. I feel safe trading with a tighter stop loss than what I had here, because look at how it's been respecting that price level. And this has to kind of be fast because we're down on 3 minutes. So I don't really have, 15-minute candle trading or 1 hour. I don't have time to sit there and typically think. This is just, you have to train your mind to think this way. I was already looking to get in. So as it's pulling back, I'm not waiting for this red candle to say, oh, wait, can I get in here? Wait a minute. Let me figure, okay, can I move my stop any tighter than what I have back here? I'm not waiting for that candle to have and do it. As it's pulling back, so as we printed some green candles here, and I drew my retracement line from there to there, as it's pulling back, what do we got? 1, 2, 3, 4, 5, 6, 7. We've got 21 minutes in there. I had plenty of time to think this all out. So you got 21 minutes in there. You could take a coffee break, do whatever. You got time. As it's pulling back, okay, and set an alarm on this right here. You could set an alarm on this trend line, pop up your alarm, and set it when the price has crossing. I like crossing down. So when the price is crossing down below that line, I want to set an alarm. I'm not going to do it right now, but you create an alert there so that if you do get up and walk away, you're basically waiting on your computer to tell you and the market to tell you that it's broke that trend line. And you can even put one up here. Okay. But basically during that 21-minute time frame, I'm looking at it pull back. I know it's possibly going to turn there. I already know I should be looking at shorts. I already know I'm 50, 60, 70% here. So I know if it breaks that trend line and gives me a red candle, that's 80%. As it's pulling back, I already know if I get a break of that line and a red candle, I will be at 80%. So during these pullbacks, this time, I have 21 minutes. I'm thinking, okay, I'm going to be at an 80% trade if it breaks that trend line and gives me a red candle. Okay, it's respected this level so well. I could probably tighten my stop. Okay, bam. I've thought that out way before I even got in. I'm planning my business plan, my trade plan. That's it. I'm going to be at an 80% entry. I'm going to take it short if it breaks this trend line, gives me a red candle. I'm going to tighten my stop loss some because this level was respected very well. Where is my target? You could see my target. My target was here. Why there? Well, let's look to the left. There you go. That's it. I don't want to go all the way to the bottom of the move. I did not want to come down and mark this and go, yep, it's going to pull back there. Do you know why? I didn't know it was going to pull back there. No one knew if it was going to pull back there or not. Nobody can tell you that they knew it was going to pull there. How many times have you seen the market turn short of hitting a tick? I don't know how many people I've ever heard, but I had my target there. It came 2 ticks from hitting my target and then turned. I got stopped out. Well, first of all, you should have closed out partial. You should never be stopped out in a full trade. You're picking bad entries probably. And yes, it's going to happen once in a while. The market's just going to turn. It should not be happening all the time. Okay. It should not. If it does, there's some other issues there. but it shouldn't. You shouldn't be getting stopped out on full trades often. You should be able to pull partial on a lot of these. So to me, over here, I had a good start, good trade, pulled partial, left runners on, and then it just didn't take off. Well, I'm trading Nasdaq off hours. For me, and for the Nasdaq, guess what? When do the market makers trade it? It's not 10 o'clock at night, 10 o'clock at night. It's during the U.S. stock market, during those hours, 9:30 a.m. Eastern to 4. Okay. So that being said, we still will get movements. Can you trade them? Yes. And I did. However, you have to realize you're trading off hours. So that was my entry. My target was over here, that low, because I said, okay, it turned there. And look at this. This even went through a little bit. So since it did that, I'm not going to pick the bottom of that. I'll pick the bottom of this. That was my target. And I look at that and go, that looks good to me. I don't really need to figure risk to reward. I'm using this tool. I know a lot of you guys use the tool on there. So I don't need to calculate it. I can visually see that my green zone here on this tool is bigger than the red. And it doesn't even look like the red zone is half of this. It looks like a hair less than half. So as I look at that, I could easily call that 2-to-1. 2-to-1 risk. And this one was over 2-to-1 because remember, my target was on down. It just didn't go on that one. So here I'm looking going 2-to-1. That's good. And again, you're mapping that out before you get in. You're mapping that out as it pulls back. If you notice where my zone is drawn, it's drawn before that red candle. It was drawn way before, right before the red candle, when that pulled back right there. I didn't see nothing to the right. It hadn't happened yet. It was blank over there. And that's when I took the time to draw my tool. It wasn't when I got in. I mean, I had picked out this for my stop, and I had picked out this for my target. Those two areas I knew. I did not know that the red candle was going to form and close right there. All I knew was my stop, pre-planned as it pulled back. Stop above this level. Target here. That's all I knew. Then when it forms the red candle, well, then at that point, I have my entry. Boom, I'm in. I already have my stop, my target place. Stop was there, target down here. That's my whole trade. If there's profit in here where you can pull partial, because as you see, what do you see here? I should be willing to close partial there. For one, again, I'm trading off hours for Nasdaq. I already had a good trade over here and closed out most of it. Had runners on still. So I had runners from this trade stacked on another trade here. Closed partial is there. You'll see it's about, so the closed partial was a 1-to-1 on this. Since that's about, it's not quite 50. I think it, yeah, it looks like the red and green zones in here, this part of the green to the red, looks like a 1-to-1. So close partial at 1-to-1. And then if it comes down to here, I'm going to close one more run, or one or two. It depends on how many you leave on. And then if it keeps going, I'm in. I'm just going to ride the runners. There it hit. So when it got down to here, I did not close there. I could have closed there. I wrote it out for it to go. Now, pending order, we just mentioned, if you had 10 contracts on here, let's say you close out 8 at your daily profit, you could have closed out 8 here with the limit order, pending order. Okay. So put your pending order on 8's closed. So 8 would have been closed right there. Boom. 8 out. Got 2 left. And my stop's still up here. We're not moving our stop. We got to give it the room. So to me, that's a good, decent trade. Tick down, sitting in that area. I'm going to tick a lot of this over. I know we're getting into the 3-hour mark, I think. So there it pulled down. It did not get to that other level and pulled back. There's my other trade. I'm just going to zip through this one quick since I just covered kind of how you got to think through this. So my other trade was when it pulled back. So, you know, as we look at these, swing down, closed out 8 of the 10, pulled back. We're looking for it to go down to that bottom. Well, guess back here. Well, guess where it doesn't get? Over here. Well, guess what? Boop, eventually it got there. On the third trade. This second trade, it never got to where we had even that target level. So when it pulled down, when it retraced back, guess what? Retracement line. Another retracement line. What areas did I mark else? Was this right here. Pretty much where I got in. Where I got in here. Pulled back to test that. Pulled down. Pulled back to test that. Pulled down. So to me, I was like, okay, I need to mark this level. That was my level I marked because it had come down off the this one here, our support and resistance level, pull back to test that price level. I'm looking at price level, pull back to test that price level twice, and then went. So it had tested that level twice. So I marked that level 2. As it started pulling back, now I'm in on runners only because right here, this took out, if you put on 10, you close out 8, you'd have 2 runners on. Oh, and we had 2 runners on here as well. So we actually have 4 runners on. It pulls down. It starts turning. It never gets here where we could close out a couple of the runners if we want. So it pulls back. As it pulls back, I'm preparing to enter again because I say to myself, yesterday was bearish all day. We had that triangle, that flag, bearish. All the highs were getting lower. It finally popped the bottom, bearish. It pulled down. It pulled back to test that bottom as resistance, bearish, bearish, bearish. I'm thinking bearish every time it pulls back, as I should. I want to go with the trend. I want to trade with the bigger moves. So as it forms these green candles, I say to myself, it's in a pullback. I draw this retracement line right here, from here to here, there, if you waited for that candle. But you draw the retracement line. You say to yourself, okay, there's my retracement line. As long as it retraces back along that line, once it breaks that, I'm going to look to get in short again. If it pops above this level, caution, may not be time. If it pops above this level, definitely not time, because that is our main level that we've marked. That's the one we traded these off of. So, but as it's forming these candles, those are my thoughts. I'm going to trade short. If it breaks this retracement line, going to trade short. Where's my levels? Level here. We already know this one. As long as it doesn't break this, and you can see what happened. It didn't. It pulled right to test it. And then we had a break of our retracement line. That's, you get in on that or you wait on a retracement. I was already in. So I was already in 2 trades and had 4 runners, 2 each. I had made a lot on these 2 trades. So at that point, I've got a lot I can risk. So did I took it when it pulled back. No, that's not right, guys. Oh, you know why these moved. I'm changing charts around. That was it for me on that. Stop was not there. It was, I'm looking at the exact price. I think it was somewhere right there. But anyways, you're waiting for the retracement line to break. That was the break. I went ahead and got in the trade, and glad I did. If I waited for a pullback, we didn't get it. But the pullback for me was this. It's that retracement. I mean, it retraced all the way back from this move down. And if you look at from this level, those that use fibs, if you look from here to here, we're just past 50%. I think this wick touched around the 1.8 level. That's just a Fibonacci number. So when you get a pull in one direction, it'll pull back and retrace. X amount is what you're looking for, and then bounce. And that's what you enter on, is that swing bounce. So that was another trade I took. I took it. Is it a little riskier? Possibly, because again, I didn't wait for a pullback to test the back of the retracement line. But for me, I already had this build up because 50% trade in the trend. It had popped down, pulled back to test this 3 times. 1, 2, 3. 3 tests. And then it pulled back and retraced, another 10%. Broke the retracement line, another 10%. I had multiple reasons to take this. So I went ahead and traded that short. Where was my first take profit? This one was a little close because I'm looking at candle bodies in there. And I was like, again, it's off hours. So for me, I'm thinking, and at that point here, it is 12. I mean, it was 12 o'clock. So for me, this is late because I'm normally in bed by then. So for me, but I was doing so good. It was these. I'm like, okay, it's just going to keep me in, keep suckering me in. So I went in and took it. My first take profit was there. And if you look, that is about a 1-to-1 somewhere in there. So, and I'm not sure exactly where my price was on my stop. I'd have to look at the order. But basically a 1-to-1 on partial, and then we leave runners on. And I already have 4 runners on. So that right there, we close out partial. That was my first target. And that's where it went. Again, if you put on 10 more contracts, you close out 8. Put on an order to close out 8 here, leave 2 runners on. It went right to that level, close out 8, pulled back some. But look at where it went. Look at where it stayed between. It stayed between this new target, because this wasn't a target over here. As it pulled down and turned, this became my new target. My take profit. That previous low, the recent low. Recent low became my immediate target. And look at where it pulled back to. Over here, it basically stuck between this low and this low. It just stayed sandwiched in there for a while and then popped to the downside and then popped to the downside more. So when it hit this one, you could close out part of the other. There's 2 runners, 2 runners, 2 runners. There's 6 runners on. So again, the runners are for that. They're allowing you to stack on more profit. And then I was done. I went to bed after that. So where it's at now, and my little puny trades, look at how small they look on the grand scheme of things. I mean, when you draw the whole map, when you pull in all that data, we had this downward move, big one yesterday. And again, that was where was it? Right here. That's not it. I'd have to go look. But basically on the grand scheme of things, big swing down where? Well, there's Tuesday. Big swing down toward our 4-hour zone. So again, we're trading zone to zone with our trend lines in there as well. All I did was short when it broke out of that support level, was able to take 3 shorts. If I'd have stayed up all night, I could have shorted here. I don't think I would have shorted there. But as you can see, it just made lower lows, lower highs. But then it stopped. But I'm sleeping. And that's what we're playing with now. So we've had that sideways movement. And then it finally broke out of there. I'm not in any of this right now. And this is why I tell you, Nasdaq is not a beginner. It's not a game for beginners at all. If you're a beginner trader, just stay away from this. I know people do. People try it because there's a lot of people. There's a lot of people on Instagram and stuff that I don't know what you want to call them, influencers, I guess, whatever. And they'll do Nasdaq because it creates exciting content to trade it. And some of them don't even trade down on a 1 minute. They're on, they trade like 20 seconds or 30 seconds, but normally it's down on like a 20-second or 10-second chart. And why? Because if you look at 10-second candles, man, they print every 10 seconds. It's exciting. I don't want to get into that. To me, you're creating more risk. So again, this is one I think people should stay away from. But all we're doing is now we are bullish off of what? Bullish off of our 4-hour zone down here. Well, where's the target? Way up there. Is it going to get there? I don't know. Because all I can see right now, and I'm not going to leave this. I'll take it back off. All I can see right now is that. Okay. So basically it popped down and we saw, and that's why I did this in here. Made a low, came back, and it kept making lower highs. That's what you saw back here, lower highs, and then it popped. And you'll see that often. You'll see it all the time. So that may be as far as it goes. Now, I won't leave that zone, but I would 100% come in and map out like a support and resistance level there because it's right there. I mean, it's almost up to that point. So a little caution. If you're trying to get in long now, you're kind of getting in on an extension. But check this out right here. So what looked like a nice, gentle start off the bottom, off our 4-hour zone down there, looked like a nice, gentle start, higher highs, higher lows. If you would have looked back, I wouldn't have gotten any of that long because we have this level right here. I would have only recently been thinking once it broke through there, that level, and a candle closed above it to possibly go long, which we had here. It popped up above, popped down below to test that green candle. Yeah, I would have taken that. You could have taken that. But look what happened. It barely popped up and then big wick down. And if you look at the time frame on that, it's 10 o'clock. And you have to look and see what happened at 10 o'clock. Does anybody know what happened at 10 o'clock? And if not, you should know. Because you should always be aware. And again, you can be a technical analyst. That's what you are, technical analyst. But you need to have fundamental awareness, always. Because you're trading before news. So you have to be aware of where news is. So if you're taking that entry, you have to know that news is about to come out. Something's about to happen. And it's a little more dangerous to trade. Yep. We had news come out. So would you have taken that trade now, knowing that news is coming out? All right. Nope, not before news. Let's wait for news to play out. What did news do? News popped down. That's a 3-minute candle during news. Popped down back, pulled down, nice bullish candle. Okay, that's another reason to take a trade right there. That's a bullish engulfing pattern. Red candle with a green candle that's bigger than that, the body. And plus it's back up above that price level. For me, the important would have been this price level. Another candle closed above the price level. It pulled up, made a higher high, pulled down, made a higher low. Could have entered there. There were several times, but I would not have entered on this one. To me, if there was no news coming out, this would have been a prime entry. Because guess what? It would not have done this. We would not have seen that big wick. It probably would have, anything, come down and hit the top of that turn. But because of news, that's what we got. Okay? So riskier trade. So before news, I certainly, if you're normally going in with 10 contracts, you certainly shouldn't go in there with 10. There's no way. News, risk your trade. So right now it's kind of pulled up. It's pulled up without me. I'm not in. Hopefully somebody's in it. Let me go back and look real quick. So there's the news, or oil, sorry. Someone wanted to go back at, ooh, gosh, guys, this is awesome. Somebody asked me to go back in oil. And yeah. Nice 3-minute candles off that. But we're still between two zones, guys. So it may pull all the way back to that zone. It's because of news. So this is not, it's not settled down right now. That's the only thing I don't like. I'm not going to change the color of these lines. Just popping them on. So that was the downward trend line from yesterday. Or sorry, earlier, not yesterday. I'm so stuck in yesterday. So that was the downward push we had. We're getting a huge pullback on that. I don't know why we had such a huge pullback on that, because that was after news quite a bit. That's more recent. So we had a nice push down off that and hit zones. And again, we're at the 4-hour mark. So for me, again, I'm looking at two things, a couple things. One is I have this 4-hour uptrend line. So it would be a big no-no for me to short long term. And in short, and look for huge profits. If I shorted, I would think that may be all it goes. And then two, we have a 4-hour zone. And then I would actually at that point draw this for my more intraday trades. Like I'm looking to get in 3-minute chart 5. I have to draw that price level because it turned right there. Big push up, big pull back is all we've had. So retracement back to that zone. So I would have been looking for long still. Long. Because again, it's bounced off that 4-hour zone. So I'm still bullish on it. Our bearish move was back here. So it just had a big leap and a big pullback. Pulled right back to where it was. Pulled right back to. And guys, I love the zones. I'm a firm believer in them. And sometimes they will bounce back and forth. Past a zone like here, well, it was kind of drawn to the trend line. That's how I kind of look at that. It was drawn deeper past the zone to a trend line. But then look at the yellow zone, how it turned right there. Okay, and again, we're doing those off the 4-hour time frame. So that's all those are, off the zones. And this is it's way down here, right there. Big swing down, big swing back, major price level. This one, red one here, is not as major as this yellow. This yellow one is a stronger price level because it had such a huge move down and it stopped right there. And then we had a huge move up after. Major price point. Well, this red one, it was over here. So again, major swing down, major swing up. So that's why we're going to leave those two on our chart. But that's where we're at. We're at that yellow zone. So I don't know. Is anybody in that? I missed it because I would have taken it over here long. I hope somebody's getting that, guys. All right. So, yeah, it could be. My mid zone, yeah, it was a previous buy zone. So what I do is I will change the color. All I need is one zone below, one zone above, and then we try and draw a zone between them. So the reason why this one's green down here is because it is at a 4-hour trend line. That's 100% a buy zone. The mid zone is just, it's off that 4-hour big move. And then this is technically, you can call it a sell zone, caution zone, whatever, but it's also a 4 hour. But we drew this yellow one. We drew it the other day. And if you look right here, this is this morning. So this morning, during London session, we had it push clear up and it just barely touched that yellow zone. Pulled back, made a higher low, and then pulled up through that, touched the red, and then it pulled back and just turned right there. And then finally it broke it here, but popped down and pulled back and tested it there. So to me, right now, that's a strong price level that I have to be aware of, price zone that I need to be aware of. And that's right where it went to, just here. You know, and again, here it pushed through, but all it did was pull back and test it, pull back and test it again. So really strong mid zone for us today. So right now, that's a strong level that we can look to trade the rest of the day, possibly into Thursday and Friday. Because if it stays between this green zone and the red zone, if it stays between the green and the yellow, I'll trade the bounces up and down. If it stays between it may shift up between the yellow and red. And if it shifts up between the yellow and red, I'm going to trade that on the bounces. As long as it's rounding over and lower lows, lower highs here, higher highs, higher lows. So I don't know if it's going to stay between the lower two. That is a very strong level here, this zone. So I could see it doing that today, but with the news catalyst earlier, it may have other plans. It may pop. I missed the entry. I would have got in on this pullback. Because again, we should be thinking buys on this. All right. So I hope you guys enjoyed. I know we went pretty long. I don't care. You know me. It's 11:11. So it seems like a good time. So trade safe. Again, make sure if you don't have a trade plan, guys, you should have something in mind. And it should be based off what you need per month. You have to have a plan. Make a business plan. If you need help, I'll help you. But you should have some kind of business plan, how much money you need per month. And it could be side money. I look at it as this. I had a lot of people when I started teaching a long time ago. And most of you know I got away from that because of time. And we had kids. Tyler was a baby. I was actually teaching people when he was a baby. He was going to meetings with me. And that become a little cumbersome, didn't mesh well. So that's why I got out of it. But back then, I had a lot of people said, I want to quit my job, or I don't like my job. And I'm like, okay, well, let's look and see what you need per month. Let's make that our primary target for your trading. After that, anything extra will be a bonus check. So you can get a bonus check every month by letting your runners go. Most times the runners will overshadow your losses. Okay. So most of the time they'll overshadow. So you need to come up with a month. I don't have a year. I mean, if I meet my monthly goals, I'll meet my yearly goal. So you can start at a year. I want to make 100 grand. I'm going to make $100,000. Let's say 120. Let's keep the math simple. So let's say you want to make 120 grand next year. You want to start in January. Next year, you want to make 120 grand. Well, 12 months, that's 10,000 a month. Have you heard that number before? 10,000. Some of you should have. So 10,000 a month. $2,500 per day. Well, there's 5 trading days. If I say to myself, yep, I can be here all 5 days. I'm going to trade each day. Even with doctor's appointment with the kids, I can be here each day. Well, 2,500 breaks down to only 500 per day. Yesterday, with the runners, if you look in the Discord, I know I always post my charts with trades on them. So yesterday in the Discord, even though I was trading on my phone, I posted images. My runners at one point were $1,000 on a few runners that they were totaled up to $1,000. That's just the runner. So that was a bonus, plus what I had locked in on my primary trades when I closed out partial. So that's 1,000. I didn't close them all out. I closed out one that was 600 and something. I closed it all the way out and left the other one run. I closed out one runner on the other. So I locked in about 700-800 on the runner and then left the runner on, and at the end of the day closed it. And I can't even tell you what that was. It was like 100 something one month. So I locked in just under $1,000 on the runners. So to me, that's a good bonus. That's a bonus check. That's a bonus check from one day. Well, if you get 4, 5, 6, 10 of those a month, let's just say you only get 4. So you get 4 days a month that run where you get $1,000 on those 4 days. That's it. That's all you get for runners. Let's say you don't do anything else. Your other runners all pull to break even. But you have 4 days where the runners track and you lock in $1,000 on the runners. Well, that's $4,000 a month bonus. Let's say it's only 500 a day. That's 2,000. I don't care what the number is. It could be a $500 bonus every month. So a $500 bonus 10 months is what? $5,000 extra a year. So you're making $6,000 extra a year if all you do is make $500 bonus per month. That's not small. It's not huge, but that's not small. And that's your bonus. And before your bonus, you're locking in your daily goal. So if you haven't done that, go out and plan it, guys. Treat it like a business. Treat it like it is what you do to survive, what you do to live on. I mean, that's the way I have to look at it. If I didn't treat it that way and I was just all nonchalant and I'm losing a lot of trades, well, guess what? I can't sit here and survive. I'd have to go work for somebody. And that's not something I want to do. I quit doing that a long time ago. I think I'm too old to do that. I probably could, but I'd be a greeter at Walmart. How's that? So no, I would not, by the way. So anyways, treat it like a business. And if you are, don't get me wrong, I love the greeters, but don't get me wrong. I just will not, you have to plan it like that. All right. So I'm going to cut it off. I'm probably going to go grab lunch. Yeah, it's lunchtime. All right, guys, I'm going to grab some lunch. I'll see you in the Discord, and then we'll be back tomorrow morning. I don't know yet if I'm going to do gold tonight. We'll have to see. That kind of goes with what the family's got planned, if they've got plans to go out or something or do something. So I hope you enjoyed. I know we went long. You don't have to stay. It is recorded, but I hope you guys enjoyed it. I went over a little bit more. It wasn't just our top-down analysis. Those go pretty quick. And let me know. I know someone said there's no lag. Was there any lag at all on the charting? Or was there not much? I know a couple people said that it did not really lag. Did not notice a lag. Okay, that's good. So this may work. I'm going to check my internet speed before I get off here. Because I want to see how it's, but I had to shut down pretty much everything. But I do want to see where it's at right now, because that's been my issue. And then when I hang up with you guys, when I hang up the phone here, I'm going to call them, and I've got to figure it out, because I was supposed to call them by 1. We got time. No lag. Well, that's good. All right. So this may work. It's online streaming. So I was kind of worried about it, because when I was doing testing, it did not look like it did well. Yeah, well, that's surprising. I'm still getting horrible download speeds. My upload is okay. It's not where it's supposed to be. Now, this morning it was before we started both. And it was when I tested this morning. That's why I got up at 4:30 this morning, 4:30. because I kept doing full tests. So, all right. So I will see you guys in Discord, and looks like we're locked up. Thanks for hanging out. Hope you enjoyed, and I will talk to you later.